Hello, everybody. Welcome back to the market close. It is Thursday, February 29th, 3:46 p.m. And boy, oh boy, have we had one heck of a day in this market. We've got Bitcoin right now at 62,000. We've got the S&P at 508, showing great strength throughout the entire day, up right now about 0.46%. Robinhood 1625, Nvidia 797, and obviously some of the Bitcoin stocks are being a little bit choppy. We're going to talk about CleanSpark, Marathon having pretty rough days as the Bitcoin miners, but the overall market being intact. Core PCE data came out today, or the personal consumption expenditure inflation data, 2.85% came in line with what the market expected. Fed's funds rate right now is at 5.5%. So there is a significant delta. Inflation is not necessarily coming down, but it's definitely not going up. And so the market was pretty okay with what we had to see. On today's market close, we're going to be talking about Soundhound that currently right now is at 15.77%. It's up 300% for the year, up 80% in the past week. It literally went up about 2% since I started the market. Like I tweeted about it like an hour ago, and now it's up another 2%. They're going to have earnings today, and a bunch of other companies are going to have earnings today. So I'm going to want to talk about Soundhound, or we're going to watch their earnings call as well. Take a listen to it and see what they have to say. This is one of those companies that is either going to collapse today as we have earnings, where the CEO kind of doesn't really show that there's any juice in this company, that there's no reason for NVIDIA to have invested, or they're going to justify why NVIDIA's investment of, 2 million shares, which isn't a lot, was substantial for their future growth prospects. Right now, the company's worth $1.87 billion. It has added $1.5 billion of market cap in 2 weeks. So obviously a lot of pressure today on Soundhound. I don't even know what their numbers look like, quite frankly. So we're going to see for the first time what their numbers are. Then we have Dell, Ginkgo Bioworks. That's a big one. HP, Zscaler in the cybersecurity space. Navitas, we have that one. And so we'll get into everything today on the market close. And we'll see what we've got. Thank you, everybody, for being with me here today. Let's get into it. Mr. Ram, Tristel, Other Zinc, Alex, Roy, ENH, B Plays, Aditya, Dexter, Turkstein, Jagger Float, Michael Wilder, Yeti, Raj, Karen, Daniel, Mark LeBlanc, Ian, Broccoli Bob, Prodaman, Edmund Z. Good afternoon. Good afternoon to you as well. Thanks for being here. Kevin Smith, Beast, Sockam, Quessy, Chase, JD, Bryant, Billy, Aditya. All right, let's get into it. So first thing let's do is quickly make our list for today. So we have 229 earnings, last day of the year, or sorry, not of the year, of the month. So we're not done with 2024 yet. We've got Zscaler, that's a big one. DNA, it'll be interesting to see that one. Soundhound, Dell, HPE, Navitas. I'll add more in a second, but those are the core ones that we'll be looking at, and we'll see what they have to say. Now, what's the first thing we should talk about real quick? Let's do the Palantir segment. Let me get a couple minutes on that because that's super important. Palantir today was mentioned in a very important article. And when I mean very important, I mean, I can't even read the entire article live to you guys today because this article by Bloomberg is, it's like 20 minutes long. So they were mentioned in an article, or they're kind of the focus of this article by Bloomberg around AI warfare. So the title of the article, let me pull it up right here for you guys, is called AI Warfare is Here. By the way, Palantir stock right now, we were hovering above 25 for a little bit. Right now we're at, we're at 24.99. So let's see if we can close on that 25 level. There's a ton of resistance at 25.45. That's where there's a big, massive sell wall. But right now, 24.99. Let's see if we can close at 25. So this is the article. You got big graphics on it. It seems like they probably worked on this for weeks, to be honest. AI warfare is already here. If I Command F Palantir, let me just get you the three parts where they talk about Palantir. Number one, right here. In July 2021, when a Palantir representative offered to demo Maven for Joey Temple, who just joined the 18th as a senior targeting officer, Temple refused. A father of 8 and a veteran for 5 combat tours in Iraq on a windowsill in his office at Fort Liberty. He keeps a model skull between the unit's maroon beret, a draggard clench between its teeth. Temple wasn't about to put his trust in new software. This is about the Project Maven contract. This was a $229 million contract that Google refused to take up back in, I think, 2021. And then that's when Palantir decided to come in. And then they also talk more about Palantir with active AI processing. So this is a great article. I'll put it in the chat if anyone wants to read it. It's all about Project Maven. This is a $229 million contract again that Palantir took up when Google refused to. And basically it's discussing why AI application on the military side of the battlefield, right? Like actually implementing AI is important, particularly in the context of targeting, and why it's actually potentially more safer than humans doing the targeting. So this was really important. As Chaos Reign says, yes, digital twins and AI warfare, which is why it's really important to kind of understand Palantir's role in that entire world. So nothing too crazy on that. I'll be reading it a little bit more and discussing it more in depth on another day because it's a lot to get through. But that's one thing I wanted to bring to everyone's attention in terms of what's happening with Palantir. One other quick update on Palantir. So remember that stock I told you guys about, SRFM, Surf Air Mobility? It's down 3.71% today. I don't have a position in this stock. I don't recommend people to chase this stock at all. But Palantir did make an investment in them, and they got 1.8 million shares. Today, they put out a video, and I'll link the video right here. It's on my Twitter, of them working with Palantir. So this is the video right here. You guys can see that in the chat. And they put a 9-minute demo of them working with Palantir.
Aircraft.
They're showing all the different software and how they're using it together. So now it makes sense why Palantir took an equity stake. They don't have a controlling stake anymore in Lilium, which is a German eVTOL company. Surf Air Mobility is a similar eVTOL company, even though it's not like Lilium. And obviously, I think Palantir took the R&D from working with Lilium and said, hey, we can probably do this with another company. And maybe they see some more potential with Surf Air Mobility, which is why this company is now using Palantir software. So now we have an official reason for why they invested in them. You know, a lot of people thought, oh, maybe they're just buying them to buy them. But no, they're actually integrating their software in a sophisticated way. And if you watch the video, it was really fascinating to see how they're doing it. And so that's why Palantir has that equity stake in Surf Air. Okay, cool. Palantir right now, 24.96. Let's talk Bitcoin. We got 8 minutes until the market close. A bunch of stats today that I want to show you guys that's pretty exciting around Bitcoin. Bitcoin right now is at 62. We were at 63 for a bit. But now we're falling off a little bit. The miners, we'll talk about them in a second. They obviously have not had the best day, and I think that's quite frankly just because they ran a lot. But this is what we've got on Bitcoin. Here we go. BlackRock's spot ETF surpassed 1 billion in trading volume for the 4th day in a row. The Bitwise ETF now has 1.5 billion in assets on their ETF. They're one of the fastest growing ETFs ever. And right here, this was from yesterday, total spot Bitcoin ETF trading volume surpassed 7.5 billion, more than doubling its record. These are all of the trading volumes of the ETFs. BlackRock at 3.2 billion, Grayscale 1.8, ARK at 425 million, Fidelity at 1.4 billion, Bitwise at 252 million. They were in the top 5. Obviously, a lot of trading volume happening on Bitcoin. Now, here's a stat that's really going to blow your mind. All right. Remember yesterday, I said that Bitcoin miners mined 900 Bitcoin, which is the amount they can maximally mine, and Bitcoin ETFs bought 9,000 Bitcoin. Here's the new stat today. 11,211 Bitcoin were purchased by the ETFs. 900 were mined by the miners. After the halving event, that's going to be 450. So the reason we've seen this insane spike of Bitcoin from 50,000 basically 2 weeks ago to 64 at the top, I believe is primarily based on these ETFs continuing to buy more and more Bitcoin. And the more and more Bitcoin they buy, obviously, the more and more this thing has room to run. And the more, momentum is going to come in from retail that wants to see what's going on with Bitcoin. One quick stat on Coinbase. Coinbase has officially surpassed Robinhood in the iOS App Store. Coinbase is now number 16. Robinhood is now number 17. So Coinbase was at 31 2 days ago. To move up 15 spots in the App Store, that's not easy. I mean, the App Store is incredibly competitive. Coinbase now, number 14. Robinhood is number 16. So Robinhood was way ahead of Coinbase. Now Coinbase came up. And why did Coinbase come ahead of Robinhood? Well, more people want to get access to crypto. This is good for both companies, in my opinion. But what that really means is that retail is indeed coming back, at least so far. We saw the 10x surge in traffic that Brian Armstrong said they had yesterday. And it seems like that's not going anywhere. And if that's not going anywhere, and if that's only going to compound on each other, then this thing is going to really, 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 really exciting ultimately for Bitcoin. Okay, let's take a look at the Bitwise CEO actually talk about what's going on with Bitcoin, because it's really interesting. His argument is that this has been Bitcoin's IPO moment. So we're going to listen to this and see what he has to say. Then we have the market close in 5 minutes. One quick, a little announcement. I said in the morning I was going to make an announcement at 7 p.m. today about the new company I invested in. I invested a decent amount of money. That's actually going to happen tomorrow morning. So instead of tonight, we're going to do it as a part of the morning open. I thought it actually makes more sense to just announce it as part of the morning open. So that's not going to be tonight at 7 p.m. Tomorrow morning for the market open, probably like around 9 a.m. I'll make that announcement for a new company that I have invested in, and I'll share with you guys why I invested in the company. All right, here we go. Here's Bitwise CIO talking about Bitcoin's IPO moment.
Trading just at about 62,000, 63,000 almost, $62,808. Has now jumped 50% since the start of the year and is nearing its all-time high, with much of that action driven by heavy interest in new spot Bitcoin ETFs. Next guest helps run one of them. Want to bring in Bitwise Chief Investment Officer Matt Hogan. Good morning to you. When you look at what's been driving this price action on Bitcoin, Matt, how much of this is retail investors investing directly in Bitcoin? How much of it is the ETF? How much of it is institutions in the ETF?
Absolutely. It's a great question. We're seeing enormous demand for the Bitwise Bitcoin ETF and across all of these ETFs. And the answer is it's all of those categories. You're seeing retail investors come into these ETFs. You're seeing hedge funds. You're seeing RIAs or independent financial advisors. I think there's an even bigger wave coming in a few months as we start to see the major wirehouses turn on. But this has been Bitcoin's IPO moment. It's in a new era of price discovery. And I think prices
Palantir 2505, guys.
Could go substantially higher from here.
Let's talk about where they could go in just a minute. But I just want to go back to this idea of who you think is buying these ETFs, meaning how much of this is retail versus institutions?
Yeah, absolutely. You know, when these ETFs first launch, they're not turned on at the major wirehouses, at the major institutions. So the initial demand out of the gate for any ETF, including these, is primarily retail and independent financial advisors and hedge funds. So I think that's the primary driver. That's what we're seeing. Right. But I'll tell you, after this meeting, I'm getting on a plane to go talk to one of the largest institutional consultants in the US about this ETF. So we're going to see that next wave of institutional capital.
You did mention hedge funds, which I will put in sort of an institutional or professional category. In terms of this big move, do you think it's that money that's pushed this, or do you think it's straight retail?
Oh, I think it's both. I think it's both. It's just new demand. If you think about Bitcoin pre the ETFs, there was only a small set of investors who could buy it. Now almost everyone can buy it, and the supply demand dynamic is just off the hook. There are 30,000 Bitcoin purchased by ETFs this week alone. Bitcoin miners have only created less than 3,000. That's what's driving the price, and it's both hedge funds and retail and that advisor community.
Obviously, you have one of these, so if you say it's going to go up, people will say you're talking your book. But if you were to say it's going to go up, where do you think it's going to go?
Absolutely.
And describe exactly why.
Yeah, sure. At the start of this year, in December, we actually published our 2024 predictions. And we said that Bitcoin would trade to new all-time highs above $80,000 a coin. Based on what we're seeing in our ETF and these other ETFs, I think we have to revise that upwards. It could be 100,000, it could be 200,000, it could be higher than that. There's simply this massive supply-demand dynamic going on, net new demand and a fixed supply, and actually a reduction in new supply coming up in April with the halvening. Sometimes investing is complex, sometimes it's easy. With Bitcoin right now, it's just about supply demand, and there's too much demand and not enough supply.
All right, so that's what you got on Bitcoin. That's why it's going up. We have the market closing in 1 second. Thursday, February 29th, 4 p.m. Thank you, everybody, for being here. Big earnings. The stock market is now closed. Palantir, for the fourth time since October 2021. Look at how beautiful she is. $25.06. It's up another cent after hours. It was up 3 cents after hours. So nice close on Palantir. $25 right now. We got Robinhood closing at $16.31, up 1.12% of the day. Snowflake down 18% on the day. My daily Palantir episode today that I'll put out around 8 o'clock, that will all be about Snowflake and Palantir. I've got a lot to say on that topic, and so we'll be discussing that later today. Soundhound. All right, so let's pull up earnings. This is what we've got, guys. Soundhound, Dell, Navitas, Zscaler, and Ginkgo. Let me know if I'm missing any tickers, and I'll add them right now. I have all the websites loaded up. I am refreshing to see when we can get them. I have CNBC loaded up as well. Soundhound is the big one. Also, in the chat, which one of these do you own? Are any of you actually in Soundhound, or any of you in Zscaler? Which one of these do you actually own? And Soundhound is up 17% today, 80% for the week. Let's see kind of what their earnings look like, what their numbers look like. I mean, I don't even know what metrics these guys really care about outside of revenue and EPS. And so we'll see what they've got. FSR. Okay, I'll add FSR as well. Fisker. Yes, Fisker. I forgot about these guys. All right, so Fisker's in there too. Dell. Autodesk. Yes, Autodesk. ADSK. Correct. These guys. Autodesk. Autodesk already up 3% after hours. So let's see. This earnings has been a wild season where numbers come out and then something goes up and then goes down like all at once. So it's going to be interesting to see what happens. Soundhound, no results yet. It's probably going to take till 4:05. At this point, I've realized that these numbers really do take a little bit of time before we get them. But it's going to be interesting to see. Let's see how Mag 7 ended the day. Mag 7 right now, pretty much all green. I know they're a little red after hours, but Microsoft gained a 2% or about 1.45%. Meta trying to get to that 500 level, 490. I think a lot of money's piling into Meta from Google. Google basically, well, it was up 1.71% of the day, but still below 140. Amazon 176, that's up 2%. Nvidia up almost 2%, 1.87%. And Tesla was actually down for the day, basically flat, down about 0.08% on the day. The Apple EV news was not enough to get it to inch higher right now at 180. Let's look at crypto. All the crypto stocks took a little bit of a beating. CleanSpark was down 7%. Marathon was down about 16%. Really good earnings, in my opinion. Just, I think they ran up a lot and the market got upset that not upset, but the market's just like, all right, we're going to take some profits here, and it just can't keep running up constantly after being up 200% basically in 3 weeks. AMD, I have no idea why AMD is up 9%. If anyone can educate me why AMD is up 9%, I would love to know. AMD to me is aggressively overvalued right now. If you just look at their guidance and their numbers, long term, does this really matter? Probably not. But if you wanted to get a position right now in AMD, that's where I would be like, I don't know, dude. I mean, this thing is up basically 100% in a month, and this is a big company. This is not some small company growing up 100%. This is a very big company. $300 billion market cap. Basically added almost 100 billion in the past month. So I don't know. I don't think their earnings justify it. Nvidia's earnings justify it, not AMD. But I don't know why they're up 9%. I don't know. Okay, let's go to Soundhound. Let's see what they got. Soundhound is officially, it's up 2% after hours, nothing too crazy. 2% after hours, nothing crazy. It's up because Amit invested 25,000 in AMD. Yeah, I put in 25. Oh man, AMD. That would be. I think AMD's. I think I would rather play the ETF of the semis than buy an individual equity right now. Not after this big run up. It's tough to buy them up this much. No earnings results yet. Dell is up 1.2. Soundhound 2.2% basically. Nvidia is up about 2% right now. Trying to get the Soundhound earnings. Let me see what CNBC has. Yeah, they don't have anything either. Let's hear them talk a little bit while I'm trying to get these numbers. They're just talking about the broader markets, and I will get you the numbers as soon as I have them. Here we go.
Been a great story. A lot of the things that we feared coming into this year, either that the market was too dependent on a few huge stocks, or that the Fed was going to have to cut rates soon to rescue this market, or any of that, it's all gone by the wayside. The question is what's next, and what's going to be the next kind of impetus to get us well through these landmark levels that we're now hitting.
Yeah, I do want to mention Autodesk numbers have crossed. We are going through them right now. Dan, while we await going into that, how do you play industrials here? S&P sector's up, I think, about 25% almost from the October lows, touching a 52-week high today.
Yeah. Listen, there are two main themes that get most of the attention in markets right now. It's the GLPs, Eli Lilly, and it's obviously...
Okay, Autodesk is up 5%. I'm trying to get their numbers. The NASDAQ. Wow, the NASDAQ closed at a record high. I'm just getting that notification. Okay, so we got Autodesk. They double beat. EPS, Autodesk, $2.09. Wow, beat 195 expectations. There you go. Autodesk beat on EPS, 209 versus 195. Sales, 1.47 billion versus 1.43. That'll do it for you. Autodesk is up 5%. Zscaler is down 6%. Zscaler is down. All right, let me see if I can get Zscaler numbers. So Autodesk with a beat on the top and bottom. Not bad. Guidance probably is decent. That's why the street's giving them the 5%. Okay, here we go. We got Zscaler. This is a cybersecurity play. This is Zscaler. Here we go. Yeah, we'll talk about Ginkgo as well. Revenue 35% year over year. That's incredible. That's big growth. 525 million. Billings is up 27% year over year. That's a big one. 676. Deferred revenue 35% year over year to 1.5 billion. They lost 28 million compared to 57 million. So that's not too bad. They're still not profitable, but definitely getting there. Non-GAAP net income, 121 million versus 57 last year. Okay, so it seems like guidance was not the best because the growth is phenomenal. It seems like guidance is not the best. That's why the street is upset. I don't think they're going to stay red for a while. I mean, they're down 7%. You never know, but that's weird. Their market cap is 35 billion. I don't know older numbers, so I don't know if that's cheap or not, but they're down about 8%. Seems like the street does not like what's going on there. Autodesk up 6.8%. Dell. Wow. Dell's up 10%. Where's Soundhound? Oh boy, it's down 10%. All right, so we got the red candle there. We got Soundhound down. I'm trying to get the numbers. Let's see if I can get these. Soundhound is down. Someone has the numbers here. Someone has them. By the way, the market's expecting, let's at least look at this. The market's expecting 17 million in revenue for Soundhound. Wow, dude. The market's expecting 17 million. This company's worth 2 billion. Like, if there was any other argument you needed for that, this is up because of retail, that's the argument. The market's expecting them to not be profitable and to only bring in 17 million, which is, yeah, it's 86% year-over-year growth, but dude, it's $17 million. Company's worth 2 billion. Like, I don't think that makes that much sense. I mean, that valuation just on a top line just is ridiculous to me. Soundhound now down 5.6%, so not tanking as bad as it was before. Still trying to get the numbers. I don't have them on their website, and I don't have them on Twitter yet. But we should get them pretty soon. Yeah, they are not out yet. What else do we have? Dell. Let me see if I can get Dell as well. Zscaler, I'm trying to find those. I think that's guidance. I think that's primarily guidance. That's the big issue with Zscaler. Dell. Okay, we got Dell. We have Dell. And this is it. So EPS 220 versus 172. Wow, that's a huge beat. That's almost what? That's like 20. That's 42 cents. Operating income 2.14 billion versus 1.91. That's a big beat. And then revenue 22.32 versus 22.14. You got a beat on the top and the bottom. There you go. Dell is one of those companies that's relatively boring. I mean, it's Dell. It's not that good. Wow, they're up 13%. Does Dell have a dividend? Yeah, Dell has a 1.56% dividend, $67 billion company. They're not like some massive high-tech growth company. They're still a very important company and when it comes to computers and manufacturing, but they're not, I think the sexy name that people talk about. They're up 13% right now. That's great. In this economy with interest rates this high, it's great to see some of these names like Dell's, Walmart, Home Depot really put up some solid numbers, showing that there are sectors where the market can broaden out to in terms of rotation from the large cap. Navitas Semiconductor Company, that's up 2.6%. We'll try to get their numbers in a second. Zscaler now falling about 9%. Ginkgo's down 1%. Let me see if I can get their numbers as well. And we'll see what more we can get from here. Dell's up, wow, 16%. I'm still trying to get Soundhound as well. Let me do Ginkgo. Let's see if I can get Ginkgo. Ginkgo Bioware. Let me know if anyone owns Ginkgo. Ginkgo's an interesting one. I used to really like this company, but I got really tired of the valuation and the insider selling. It was very annoying. Kathy owns a lot of this one. This is like her next Tesla. I mean, she has a lot of shares of this guy. Okay. Oh, by the way, Shyam Sankar's on the board of DNA. So he is on the board of that company. Soundhound's still not out. It looks like it's dipping, maybe because some people got the information, or like I don't really know why it's dipping. Now it's barely down. It's down 1%. But the numbers aren't out, at least for me. Turk says it's a lotto ticket. I agree. It's kind of a lotto ticket. I mean, there's probably like a 20x there, maybe in like 10, 15 years if everything goes well, which again, the probability is low. If everything goes well, I mean, synthetic biology, the research on that is just incredible. It's just, their business is like the platform play. They're basically the app store and they're looking for their TikTok, their Facebook, their Instagram, and they take a piece of equity from those companies on their app store in terms of cell programs. And their cell program growth is not good, which is another reason I got upset. Their biosecurity revenue went down from 2020, obviously because COVID stopped and they were making like almost $250 million off biosecurity revenue. So, that stuff calms down. It's hard to get the business to continue to perform. Okay, I think we have some numbers here. Let's look at Autodesk. I'm still pulling up Soundhound, but let's at least look at Autodesk while we're waiting.
Q1 and full year, the EPS guide was a little bit short of expectations, but the Q1 and full year revenue numbers coming in ahead of analyst estimates. That stock up now 5.5%. John?
All right, Pippa, thank you. HPE, Zscaler numbers are crossing as well. We are looking at those. As a matter of fact, Steve Kovac is done looking at HPE. Steve, how do they look?
Hey there, John. Yeah, it's some mixed results here. Let's talk about EPS first. That is a beat, though. 48 cents adjusted versus the 45 cents adjusted Street was looking for. But you see shares falling here. We got miss on revenue, $6.76 billion versus the $7.11 billion the Street was looking for. And also guidance, missing expectations here as well for the second quarter. A miss here at 36 to 41 cents. Street was looking for bigger than that, even on the high end, 45 cents adjusted. And revenue guidance also missing. They're looking at a range here for 6.6 billion to 7 billion. Street was looking for slightly above that at 7.1 billion. I also caught up with CEO Antonio Neri on these results and blaming several factors here for these missing. But what really stuck out to me, John, is short.
I have the hound of the sound, folks. I have it. I believe I have it. This should be accurate. Here we go. Soundhound full year revenue. Okay, here we go. 80% Q4 revenue growth, 17.1 million. Adjusted EBITDA, 80% growth. Cumulative subscriptions and bookings backlog of 661 million. That's a 200% increase year over year of backlogs, which is not revenue yet, but it's revenue eventually. Fourth quarter revenue was 17.1 million. So that's a little bit lower than the Street. The Street thought 17.7. Where's the stock right now? Stock is down 3%. Fourth quarter gross margin was 77%. They lost 7 cents compared to 15 cents. So EPS is getting better, even though they are still not profitable, but they improved by 53%. Adjusted EBITDA lost 3.7 million compared to 18.8 million. That's up 80%. Full year revenue, 45.9 million. The company's worth 2 billion. They did 45 million in revenue. That's up 47% year over year. Should a company that's making 45 million bucks be worth 2 billion if they're growing about 50% year over year? I don't know. That's an interesting question. Full year gross margin up 75%. Full year earnings per share was a net loss of 40 cents compared to 74 cents, which is up by 46 cents. Look, 46%. This is not a bad earnings. This is not a bad earnings at all to me. This is actually very, very solid. I mean, these numbers, 80%, 2x booking, 77% gross margins. These are not bad numbers, but they're not bad numbers for a company that maybe is worth like 500 million to a billion. I don't know if they're amazing numbers for a company worth 2 billion. That's up 300% year to date. I don't know if that's the case. So they're down about 5%. I don't even know what their institutional float looks like, but I would imagine it's not that high. I mean, they haven't been a public company for that long. So, I mean, it's not the best, definitely not the worst. But it's not the best, not because of the company. It's not the best because the valuation, I think, got really ahead of itself. Obviously, because retail got excited for it. Zscaler. All right, here's the Zscaler numbers. We already talked about this, but this is the official numbers one more time. Zscaler revenue, 35% year over year. Billings, 27%. Deferred revenue, 35%. GAAP net loss of 28.5 million. I am trying to pull up their actual website. I think their guidance is what investors are mad about. So let's pull up the. Okay, here we go. We have the actual thing. Share this tab. You guys can see it. So we looked at the top line numbers. Now we need to see their 2024. Okay, here we go. So third quarter 2024, they expect 534 to 536 million. This quarter they did what? 525. Okay, so that's growth quarter over quarter. Billings of 2.5 to 2.57 billion. Non-GAAP income 395. Non-GAAP net income 273. Why is the Street upset about that? I feel like this is Palo Alto Networks all over again. I know it's not as dramatic of a drop. We can see Zscaler already recovering. It was down 8%. Now it's down 5%. These are not bad numbers, dude. I mean, these are. Well, we're doing Zscaler right now. We're looking at Zscaler. It's a cybersecurity company in the Palo Alto network space, the crowd strike space, and the Fortinet space. Dude, 35% year over year is what a tech company should be growing at. Like that's amazing. They're not profitable, but they look pretty damn close. They're $50 million away from, $28 million away from profitability. They're going to get there in the next 1 or 2 quarters. And this is great growth. Guidance is not bad. I don't know why the Street's upset at this one. It feels like this is more of a sector thing. The Street might be upset at. It looks like that's pretty good. DNA. Let's go to DNA. Let's see if we can get them as well and see what they've got. Ginkgo. DNA, let me pull up their actual website, Ginkgo Bioworks IR. I don't think the numbers are officially up. Press release. No, these are not out yet. These are not. Let's see on Twitter. Is it out? Twitter, it is still not out either on Twitter. Still not out on Twitter. Okay, so we're waiting for Ginkgo. That's the next big one. That's waiting for Ginkgo. I'm going to try to pull up Dell numbers too. Dell's up right now currently. Let me know if anyone owns Dell. 15%. So let's pull up Dell. Let's see what Dell has. All right, here we go. Here is Dell. This is... All right, we got Dell. We have a Dell. And that's never going to be someone like you. You get it? Okay. Anyway, Dell Technologies delivers fourth quarter and full year results. Fourth quarter revenue of $22.3 billion, operating income $5.2 billion, full year cash flow $8.7 billion, full year diluted earnings per share 4.36, 20% increase in annual cash divvy. I think this is like the 10th company to do a dividend. At least the 10th company to do a 10th really big company to do a dividend. By the way, Soundhound is falling. 10%. Soundhound's down. Zscaler is recovering, down 3%. Autodesk up 4%. Dell up 16%. Another company increasing their dividend. We saw this with Meta giving a dividend for the first time. We saw this yesterday with Salesforce increasing their dividend or by 40%, or initiating a dividend by 40 cents. There you go. Companies have a lot of cash and they're giving it back. You know, the other thing that's interesting to this about the broader market, if companies have this much cash and they don't know what to do with it, that just means, like, I don't know, dude. I feel like that means the economy is somewhat healthier than what people think. If you have this much cash, you can't invest it into R&D. You're not going to invest it into, like, you know, more labor because the labor market's already tight. You have enough employees. In fact, you have to lay off employees because there's too many. Then the best thing to do is give it back to shareholders. What that means for the broader consumer is if shareholders get that money back, they can spend it, invest in more companies, or they just not sell the stock. So the stocks stay elevated because that dividend keeps you up. And that's just great in general for the broader economy. So there we go. Money's coming back into the economy because of the fact that companies have cash, and they're making cash because the consumer is strong and they're willing to actually spend on these companies. Dell is up 18%, dude. Who would have thought Dell Technologies would be up 18%? I don't think anyone expected that one. Soundhound down 15%. I think everybody expected that one. Unless you bought Soundhound at the top, which if you did, I'm sorry. Like, there was so many people this past week on Twitter like, hey, should I buy this? Should I buy this? I'm like, no, it's not worth it. It's just not worth it. It's like, it is like, let's say it went to like $20 right now. Like, it's not worth it because it could also go, it's not worth chasing. Sometimes you got to drink the liquor without the chaser. It's okay. And I used to be a chaser. I used to be a big chaser in 2021. I know the girls used to chase after me, but I also used to be a chaser. And I've retired from chasing. I've had to. It's just not healthy. Nvidia's always had a dividend, but it's been a very small dividend. It's like 0.03% or something like that. Nvidia is a very, very small dividend. Like PayPal, right? Okay, no, I did not chase PayPal. PayPal is the most undervalued company in the stock market, in my opinion. Like, it is what it is. Now, people got mad at me on Twitter today because someone asked, what's the most overvalued company in the stock market? And this is what I said. People were not happy when I said this. I was like, it's PayPal. Everyone was like, what are you talking about? I'm just like, dude, I get it. I know it's undervalued, but this damn stock can't even touch $61. All right, let's get back into HP. Let's get some coverage on Dell. Here we go. Let's get some coverage here on Dell.
Let's just start with Q4 results first. You got EPS of $2.20, which is a large beat on revenues of $22.3 billion. Also beat, but still down 11% year over year. When we're talking, the company also mentioning that they're increasing their annual dividend by 20% and that they're optimistic about fiscal 2025. But to your conversation just now about AI and PCs, so the PCs would fall into the client solutions group. That was down to $11.7 billion. The street was anticipating $12 billion. And their infrastructure solutions group, which they're hoping to continue to grow, that beat at $9.3 billion, with the company saying, quote, our strong AI optimized server momentum continues, with orders increasing nearly 40% sequentially and backlog nearly doubling, exiting our fiscal year at $2.9 billion. Recall just last quarter, they put that number at 1.6. So now it's $2.9 billion in AI server backlogs. And you can see the stock reacting 14% higher right now.
Wow, Christina Partsinevelos, thank you. Mike Santoli, we're seeing a contrast here between HPE and Dell, and the first thing that jumps out is just, did they have AI-optimized servers to sell? Dell's talking about having them. HPE is talking about not having enough.
Yeah, I mean, HPE's server revenue in particular was down 23% year over year. It's like half the revenue of the last quarter. So clearly, massive headwind. Just basically the legacy businesses in runoff mode. So yep, that's the difference. I would have thought that the bar was pretty high for Dell in terms of how the stock might react, because it has been extremely strong for a while. The market's in on the joke that they are pretty well positioned, it would seem here, even though it's not an expensive stock at all. It still has that kind of old tech multiple on it. All right, let's see how Zscaler is doing. Dan Greenhouse mentioned it.
Ginkgo is not out yet. I'm still looking at that. Let's get coverage on Zscaler, but I'm looking for Ginkgo.
Steve Kovac is ready with the numbers. Steve?
Yeah, John, big beats here. EPS coming in at 76 cents adjusted. Street was looking for 58 cents adjusted. And also revenues, a pretty healthy beat there at 525 million versus the 507 million adjusted. Also, I would say guidance for Q3, very strong. It's unclear why shares are still down quite significantly here, 7%. So I'm going to keep digging through. But there's your top and bottom line numbers there, John.
All right.
See, even CNBC doesn't know why it's down. I was like, I have no idea why it's down.
Thank you, Steve Kovac. Dan Greenhouse, there might not be a reason in there. Sometimes these stocks move in crazy ways. Well,
Take that with a grain of salt. It was a
Here's some Soundhound coverage.
top and bottom line miss, reporting a 7-cent loss that was 1 cent larger than expected. Revenue coming in at 17.1 million, a little bit short of the 17.7 million the street was looking for. Revenue guidance for the full year essentially in line. The company did say that its revenue was up 80% year over year. They also noted their pace and agility amid this AI revolution, which the company says puts it ahead of the field when it comes to delivering real commercial value. And the stock up, of course, 250% this year. John?
Yeah, got some recognition because of involvement with NVIDIA AI around voice. Thank you for that, Pippa. Mike Santoli, with NetApp and these results strong from them, it reminds me of Pure Storage last night. Two storage names. NetApp was really reliant on what the cloud players were going to do. It seems like that perhaps is shaping up for them as, again, this AI rush of data creates demand for storage as well.
Yeah, without a doubt. And again, it fits right into that idea of people feeling like they have to go a little bit further downstream to find, where the money is flowing. And that's going into these areas and these hardware related, things that have been around a while like NetApp. They don't have the crazy valuations because people didn't presume huge growth rates. So I think that's why you get a little bit of a bump to say that they're part of the story. Although.
All right, no Ginkgo yet, folks. We are looking for Ginkgo. I think they come out at 4:30 maybe, and that's kind of the issue we have. So maybe we need a couple minutes on these guys. Soundhound is down 12%. They are down. Zscaler's down 4%. Ginkgo's up about 1%, basically flat. Navitas, let me try to get that one. This is a semiconductor company. I don't understand it that well. Someone told me about it yesterday and said that it was looking pretty interesting. Trying to get their results as well. But outside of that, those are kind of the main earnings for today. Yeah, their numbers aren't out, or at least I'm not seeing their numbers on their website. Fisker Fisker's down 20%. We forgot about Fisker. No one mentioned Fisker in the chat. We forgot about Fisker. All right, let's pull up Fisker. So let's look at Fisker. Fisker is a automotive company. It's a very interesting automotive company, especially around sustainability and those vehicles. Let's pull up their numbers. Here's what we have on Fisker. Let me know if anyone in the chat owns this one. This one's down about 20%. After hours. It is in the EV space, working, competing against Tesla. Fisker, revenue 200 million. This is up 128 million from last year, from Q3, so sequentially. Fourth quarter total revenue, which was 279 million, and the total fourth quarter revenue excludes 44.6 of deferred revenue. Okay. Gross margin was negative 35%. Oh boy. That's not the best. Obviously, cars have not the best margins. They produced 4,700 vehicles and they delivered 3,800. So 3,800 people in the last 90 days purchased a vehicle from Fisker. 10,000 were created, 4,000 were delivered. They have 250 potential dealerships that they're working on. Cash is 359 million. CEO says 2023 was a challenging year for Fisker, including delays in suppliers and other issues that prevented us from delivering the Ocean SUV as quickly as we expected. We also encountered unexpected headwinds in our effort to establish a direct-to-consumer sales model in both North America and Europe at the same time. Okay, so this obviously was not the best earnings. I don't know why anyone owns Fisker or Lucid, but there are people that do own it. Fisker's market cap right now, 380 million. That's down about 16%. Tomorrow it'll be lower than that. 52-week low was 52 cents. We're at 60 cents, so we're close to that 52-week low. I mean, at this point, it's a penny stock, right? It's under $1. It's kind of like, you're buying it, hoping something might happen. Obviously a small cap, but yeah, that's not the best results. Again, if you're trying to go up against Tesla, as even Rivian, who is well more capitalized than Fisker, they were up about 0.18% today. And obviously they're backed by Amazon, so they have a little bit of juice there. If they can't do it, it's not easy for everybody to do it. Palantir, $25.02 after hours. AMD, for some reason, it's at $194. I don't get the AMD hype, but AMD is up. Robinhood 16.17 after hours. Coinbase down about 1.26% after hours. Soundhound now down 14% after hours. So that's down. And some of these other companies are holding up pretty okay. Celsius is the star of the day. Celsius somehow, not somehow, they had the good results, so that's why the street gave it to them. They're up 20%. So shout out to anyone who owns Celsius. That is absolutely incredible due diligence on your end. Celsius now getting to a, what is their market cap? 20 billion? Yeah, $18 billion market cap. Up 20%, folks. Pretty incredible for Celsius. The stock was at $50 last month when a Bank of America analyst said that the TAM for energy drinks is not that strong. And then Celsius said, hold my Celsius. And they kind of proved everybody wrong. Amit, you should ask Dan Ives why Soundhound is down. Dude, the reason Soundhound is down is not because of their earnings. Their earnings were incredible. These are amazing numbers. It's just the thing's up 250%. There's no way that it was going to be sustainable. I don't know about you guys, but I did not have any expectations thinking Soundhound was going to go up, 40% off some amazing numbers. Like the thing's up 250%. This is the same thing with CleanSpark. Let's talk about the miners for a little bit. A lot of people on Twitter I saw today were really upset that CleanSpark's down 8%, that Marathon's down 16%, that Robinhood was down 2%. These are companies that have run significantly. If you're upset, it's because you bought the local top. I'm sorry. It is what it is. If you're upset that Robinhood's down or Marathon's down or CleanSpark's down, it's because you bought Robinhood at $16.50. You bought Marathon at $32. You bought CleanSpark at $22. You got a DCA if you're going to buy something after it runs, if you're going to chase it when it runs, you have to be ready to DCA because there's going to be bumps in between. I think fundamentally on their businesses, there's nothing really that's wrong. Marathon had a phenomenal earnings, produced 12,000 Bitcoin. CleanSpark had a great earnings, cheapest cost out of all the miners to mine the Bitcoin. Robinhood, incredible earnings, but they ran up a lot, right? And so they're gonna take a little bit of a breather, and that's okay. And if anything, if they take a big breather, that's a better dip opportunity, in my opinion. So the only thing stock we can be upset about is PayPal. PayPal is the one where anyone can, cry about. But these stocks that are up so much, like Soundhound, you just can't be upset when they come back down. You just can't be upset there. Someone's got to buy. Yeah, 100%. Someone does indeed have to buy. And so it's about, look, I've been in that situation where I get into a stock and all right, I get a little, I got not the best timing. So you DCA, it is what it is. It's not the worst thing in the world, but it's just something you got to have to understand. Here's Dell. We have an analyst here who has a buy on Dell, and here's his argument for why Dell deserves to be up about 18% right now. Here we go.
Amit Daryanani. Amit, good to have you with me here. We're seeing.
Oh, his name is Amit too. That's cool. That's cool. I hope I don't lose all my hair when I grow up, but that's probably gonna happen. Here we go.
This bifurcation I was talking about in who's got more of an AI hardware story, who's got supply of NVIDIA chips, maybe based on demand for the systems and the margins they're able to get out of them, and who doesn't. HPE did not have results that made investors happy, but Dell does, right?
Yeah, absolutely. And I think the single biggest number that matters at Dell is this AI backlog of $2.9 billion that practically doubled for them on a sequential basis, right? To your point, they seem to be having the blessings of NVIDIA to get allocations, get chips, and that's only driving a lot of the upside momentum on the stock.
So does buying Juniper fix the problem that HPE has here relative to Dell?
I don't think it does, right? Where Dell is winning is selling GPU-based servers right now to kind of the tier 2 cloud companies. Juniper is going to give HP a really good presence in enterprise networking, but it doesn't really give them this AI server play that, so far has been dominated by Supermicro, but you're seeing it broaden out to a Dell right now.
So when I look at Dell up like this after hours, but
that's really interesting, guys. One of the reasons Dell is up is if it's getting comped to Supermicro in terms of the servers that need to be created for GPUs, that might be a huge level of growth that Dell might experience, obviously, if GPUs are growing as well.
Also, NetApp doing well, Pure Storage doing well. I wonder if Dell's storage business is doing as well as it should, or if it's just, outperforming here and there.
No, listen, I think you had a great point, which is if you look at Pure yesterday, NetApp today, and even Dell, Dell's storage business came in at about $4.8 billion. The street was looking for $4.2 billion. I mean, this was a big reason why margins on infrastructure were up pretty dramatically. I think they're up like around 15.3%, much better than expected. And that's really what drove the EPS upside in Jan, is actually I think it's a better storage performance from Dell, and you certainly saw that with Pure and NetApp as well.
So what about security? Some of these bigger players like Dell, like HPE, like Cisco even, which had a rough quarter for earnings, reported a rough quarter. They've got security businesses, but then you've got standalone, what they like to think of themselves as best of breed businesses like Zscaler that reported today. Its numbers were strong, not what investors were expecting though. How are these bigger names faring versus those kind of newer age security platform entrants?
Yeah, it's sort of a great dynamic in security scene, which is it's almost a platform plays, right? And Cisco is only one of the bigger platform plays in security versus, the pure play point solutions like a Zscaler, for example, right? And to some degree, I think what you're seeing right now that's helping Cisco is the more further away you get from the pandemic, our enterprise organizations are starting to consolidate their security sprawl, and that certainly seems to be.
All right, folks, we got some breaking news. We got NYCB, New York Community Bank. What he's saying about Dell, I agree with. If it becomes a sort of server play the way SMCI operates, especially to some of the tier 2 cloud companies, then yeah, I mean, Dell is back in the running, obviously, because of A&I. So it'll be interesting to see how Dell plays out. Some New York Community Bank drama. They're down 14% right now. This is something that just got posted 10 minutes ago. This is from the New York Community Bank Corp Board of Directors. Ladies and gentlemen, I write to notify you that I hereby resign from my position as director at Flagstar Bank and New York Community Bank, effective as of the date hereof. At the time of my resignation, I did not support the proposed appointment of Mr. Dianilo as president and CEO of the company. Hanif Daya. Who is Hanif Daya? Hanif Daya. Hanif Daya is he's a director at NYCB, but what exactly here? He's a director. I guess he's just a director, and he's leaving the board, or he's leaving the company. I feel like Sherlock Holmes right now, dude. Why is this guy leaving? So he doesn't like this new CEO, Mr. Dianilo. Dnilo NYCB. Who is this guy? Okay. So we got a press release. New York Community Bank is making this guy the CEO, Alessandro Dianello. He is the new CEO of the company after Thomas Canegmi steps down as president and CEO after 27 years with the company. And then this guy, Hanif Daha, doesn't like that, and so he's leaving. And so he's gone. And that's why NYCB is down right now. Now, why does this matter? I don't know, but they're down 12%. I thought they were kind of in the clear over the past couple of weeks. Obviously, they collapsed about 40, 50%, but they are now down another 12%. Apparently, this is a very big deal. Let's go to the regionals. KRE is the ETF for regionals. That's down 1%. Of course. Why wouldn't that be down 1%? So that's down 1%. TFC is probably taking a hit. Yep, TFC is down after hours as well. I think regionals are going to be okay. I don't think they're in the worst position, especially as inflation comes down. But as of now, the market's not excited right now by regionals. Okay, I'm trying to get Ginkgo's earnings. These guys are not putting out the numbers. Let's see right here if we finally have them. Ginkgo, do we have the numbers? We don't have the numbers. I don't know why the numbers aren't out, folks. I'm trying to find them. Unless they put them out like at 5, but I don't think they do that. We'll be listening to Soundhound at 5, so we'll listen to them at 5 p.m. Yeah, still not out. Ginkgo's still not out. Yes, I'll be streaming Soundhound. And I'll see what they have to say. Hey, Amit, does your dad still have hair? He does, but it's gray and it's very little. And he's 62. So he started losing his hair at like 50-ish or a little bit older than that. So I've got a good 30 years left before it's over. But until then, let's enjoy life. Okay, DNA. You say DNA is out, but on their website, it's not out. This is not out on their website. This is why I need the terminal, guys. I need the damn terminal. Oh, by the way, I got access to the terminal today. while we're waiting for DNA, let me show you this stat right here. If you were following on Twitter, you would see this stat. I'm going to put the Twitter in the chats to make sure you're on Twitter. This is what we got on Robinhood. 91% institutional ownership for the company. 91%. The big boys are in. It's that simple. The big boys are in, and they know what the hell's going on with Robinhood. 91% institutional ownership. Don't ask me how I got access to this. I'm connected. Okay. Your boy's in the finance ecosystem. I've got connections. And so 91% institutional on Ginkgo. Pretty big. But I mean, sorry, not Ginkgo. not Ginkgo. On Robinhood. So not bad. It means that people, Street was accumulating when it was stuck at $8 for 2 years. Let's just say that. The Street was definitely buying up the stock. All right. I'm still trying to find Ginkgo. Ginkgo. Kelly says she'll love me even with no hair. Okay. That's nice. You're probably lying, but that makes me feel nice. That's that's good to know. Dude, where are these damn Ginkgo numbers? These guys this is so unprofessional. It's 437. We all have shit to do. We have stuff to do. Melatonin says, what was the stock you said you were going to say you bought today? I am not going to say it today, actually. I will be announcing tomorrow on the market open what is the new company I invested in. So I invested in a new company. It's a pretty big company. And I will be making that announcement tomorrow around 9 a.m. market open. So not going to be doing a live stream today. Instead, I think I'd just make it rather part of the market open. So it'll be more fun if it's part of that show, and I'll announce it tomorrow morning. NVIDIA bought 2 million shares of Soundhound. It's not a lot. Dell's up 16%. HP's down 2%. Navitas down 1%. Fisker down 27%. Autodesk up 6%. Their numbers were great. Ginkgo's flat. Zscaler's down 4.5%. Zscaler doesn't deserve to be down 4.5%, quite frankly. So I think that'll be okay, but that's down. He bought Fisker. Yeah. He bought Fisker. It's Google. It's not Google. But why the secrecy? You'll find out tomorrow why the secrecy. It's going all in on house hack. Dude, I would have invested in Kevin's startup. I would invest in Kevin. Kevin's a workaholic. I don't know if house hack's going to be successful, but I would take a chance on Kevin. I mean, whatever opinion you have on Kevin, the dude is just like, he just works his ass off. Like he will die trying to build that thing. So, and I think it's going well. I don't really know that much about it, but I think from what I understand, it's going well. Okay. So apparently Ginkgo comes out at 5. That's what I'm getting. Ginkgo comes out at 5. So we don't have any Ginkgo right now. Let me go back to CNBC and see what they have. We're not going to get them until 5, which means that, we're going to be looking at Soundhound at that time. Okay, we got some New York Community Bank update. Let's look at that because that's important as well, and then we'll see what else we got.
New York Community Bank Corp. Kate Rogers has that. Kate.
Yeah, John, we want to call attention to shares of that stock, which are lower by more than 13% now. On 2 pieces of news here. In an 8K filing, New York Community Bank Court says that they've identified material weaknesses in internal controls related to internal loan review.
Oh, shit. Forget the director leaving as CEO. This is a much bigger deal.
As you can see, sending the stock lower there. The company also separately announced the appointment of a new president and CEO, Alessandro Dinello, who's executive chairman of the board, effective immediately. He succeeds Thomas Cangemi, who stepped down as president and CEO after 27 years, but he will remain on the board. And in addition to that, Marshall Lux, a financial services industry leader who has been an independent director on the board since 2022, has now been named presiding director of the board, effective immediately. But once again, the company saying it's identified material weaknesses in internal controls related to internal loan review, and the stock is lower on that news. John, back over to you.
Yeah, after being up 5.5% in the regular trade. Kate, thanks. Now let's get a CNBC News update with Bertha Coombs.
So that's not the best. Basically, New York Community Bank saying, hey, we think there's issues in our loan book, and we just need to let you guys know, because like a material disclosure means you found out something's really bad, right? And they're down 15.87% now. Now, here's the thing. If NYCB dies, I don't think that's the biggest deal in the world, dude. Like, they're a very small regional bank. Company's worth $3.46 billion. They'll get eaten up by probably Jamie Dimon or somebody, right? So I don't think that's a risk for a contagion in the broader regional banking sector. I know the bank term funding program is ending in March, and that's also why the market might be scared of regionals, but I don't think that's necessarily a reason why all regionals will collapse. If they do, the best of the best regionals, in my opinion, will recover. So if TFC falls back to $30, that's a dip I absolutely will buy. 7th largest bank in America. You know, they have $500 billion in deposits. I mean, they're going to be fine. The other regional banks, I don't know. And Jay Powell did say this on the interview with 60 Minutes. He said, look, some of these guys are going to have to die. He didn't say it as explicitly as me, but he used the word consolidation. Okay, he used the word consolidation. So there's going to be some consolidating death that happens in these banks, and that's okay. It is what it is. I mean, do we need 4,000 banks in the United States? Probably not. Probably not. Where's SoFi after hours? Okay, so they're down a little bit. JPM after hours is down a little bit. By the way, Jamie Dimon started selling JPM for the first time in 20 years. So he's taken some risk off the table. Wells Fargo's down a little bit. All the banks are down just a bit after hours. The regional banks getting hit a little bit more from what we're seeing. Where are the banks? The playlist I have. Okay, here we go. Yeah, some of them are up a little bit after hours, but most of them are pretty much red right now. XLF, also the bank ETF, is down after hours as well. Mike says, I met Kevin randomly on top of a kid's indoor slide. It was the most random and unexpected meeting. That's cool. That would be funny to just meet. Yo, I have not met anyone who watches my videos in person yet. That's never happened. So the first day it happens, which maybe one day it'll happen, but that'll be kind of crazy. Just like meeting someone who actually watches the videos like randomly. That's never happened to me yet. Never yet. That'd be really cool if it does. So if you ever see me, don't be afraid to say hi. Kelly, I'm talking about someone who I don't like know from the chat. You know what I mean? Like, I obviously have met people that I know on YouTube. We went to Vegas and all that stuff. I met Kelly, but I'm talking about like a random person. You have to go outside first, Amit. Could you imagine like I meet someone with an interesting like crowd control? Like a crowd control's like, hey, Amit, it's crowd control. I'm like, oh, you're the guy from the chat. Like, I have no idea what this guy looks like or what she looks like, or whatever you are, but your name is crowd control. That would be funny. Mark says, I'll just scream writ large. Dude, that's how you know. That's how I know you actually watch. If you scream writ, or if you use any of the word of the days that we've used for like, oh, the word of the day today was so good for like the past year. What was the word of the day today? It was it's about a leap year. Bisectile. Bisectile. That's the word of the day. So if you want to talk about this being a leap year, then just say
bisextile.
Bisextile. That's not to be confused with bisexual. Bisextile. It's the way for a leap year. Okay, so we've got 17 minutes until Soundhound. What do we have here? I'm looking at any of the other news updates. Ginkgo, it looks like it's coming a little bit later. Here we go. I want to show you guys this clip, actually. I was looking at a couple of different things. Let me show you this while we're waiting for Soundhound. By the way, core PCE data came in today in line with expectations. That's why the S&P is up, and that's why inflation wasn't as big of a deal. By the way, another piece of news, the SEC is investigating OpenAI's Sam Altman. No clue why he's being investigated. The argument is that, he's not really being truthful to OpenAI investors, which maybe. I feel like the SEC is bored. I feel like they have no idea what they're doing right now. And so they are investigating Sam Altman for some reason. Okay, let's take a look at this clip. This is what I wanted to show you. The argument around the market going higher, particularly because of AI. So let's play this clip right here, take a look at it, and then we'll have Soundhound in just a little bit. Here we go.
Paul Hickey is co-founder of Bespoke Investment Group. You like to focus on tech, and that was smart. And like you weren't focusing on steel or something like that. So that was smart right from the beginning. I'm fascinated by what you're saying in how many, and I'm sorry to interrupt, but you said something very interesting. How many of the S&P 500 are AI dependent or AI related? You have an actual number.
Yeah, so within these ETFs, there's 67 stocks that are in the S&P 500. So you tend to focus, it's only, on the Mag 6 or 4, whatever it is at this point. But other companies are going to benefit, as with any technological improvement. But the key is that since the launch of ChatGPT, the AI, those 67 AI-related stocks are up an average of over 40%. Rest of the S&P, 8%. If you just look year to date, over 4% for the AI-related stocks, 2% for the non-AI related stocks. So every day we focus on the economic data and better than expected data, how it's going to push out the Fed rate cuts. But what people are missing, that's not what's driving the market. It's these AI related stocks and the perceived benefit of them down the line.
When NVIDIA reported most recently, the headline on all the major papers were global stock markets hit new highs on NVIDIA. It was like, that was so mind-boggling. And I understand animal spirits, and I understand 1999, and I can understand all that, but you've got actual evidence of why that would make sense. Not just one stock, but it has been important for a whole universe.
Right, and people say 1999. Well, Jensen,
1997 and a half. How's that?
Yeah, no, but Jensen Huang, he's biased, but he's talks about AI being bigger than the internet. So let's go back to the internet and the key events of the internet. You had AOL in 1991, and then you had Netscape in 1994, right? If you compare how the NASDAQ performed following the launch of both of those, Netscape made the internet navigable. AOL brought the internet into our houses. And you compare it to now, we're up 50% in the NASDAQ since ChatGPT was launched, which was basically the bear market low of that period. In those two other periods, if you go a comparable amount of time, just over a year, you saw similar rallies in the NASDAQ on that. So there was plenty of volatility in the NASDAQ going forward in those periods, but the path was higher. So I think, to say that we're necessarily in the late stages of this rally, I would, just look back at the 90s and say, well, maybe we're not.
Okay, so that's one thing I wanted to show you. I mean, we've heard that argument over and over again, but it's still, a decent point around what is the stage of the rally we're at. And, the bears that are saying it's late stage, I just don't know if inflation is coming down and ChatGPT is a year old. Maybe we're not late stage. Maybe we're just beginning in terms of what's happening. Now, a company like Snowflake is in a tough situation. Let's get an update on them. They're down 18% for the day. And let's get some coverage on what exactly is happening with these guys.
Since November 1st, ARM's up almost 180%, AMD up 87%, Salesforce, up about 50 or so. Snowflake was up 40-something heading into that print last night. And that's our chart of the day for what you may, understand to be obvious reasons. As you take a look at the stock here, it's down about 20%. Stephanie Link owns this stock. She's been buying it lately. She joins us now because it's the worst day ever. At least it's on track for that, Steph. I think you're a little nervous going in and maybe a little upset coming out.
I am a little upset, but look, I think the stock, as to your point, it has rallied a lot. I only bought a small position. I know it's a volatile stock, and so I was looking to buy on weakness. This today is definitely weak, and I will be adding to it when I can. No question about it. The guide was disappointing. The CEO leaving, although he will be the chairman. The company's in the penalty box at this point in time. I get it. Maybe for the next couple of quarters. But long term, the big picture has not changed. The total addressable market for them is $248 billion. They have new products. You need data to support AI and to make AI better, and they have it. And they have, again, a whole slew of new products coming. Their bookings in the quarter is the reason why I have conviction in the long term, because bookings actually grew 33%, up from 25% sequentially. And they just signed the largest deal in the company's history, a $250 million deal for 5 years. So I'm not happy, obviously, but I am going to add because I do think the long term still makes a lot of sense.
Yeah, I think, Brad Gerstner of Altimeter has been tweeting a lot about it this morning. I think it's fair to say he's a little frustrated by the quarter. Obviously, is still a long-term believer in the story. Acknowledges the good and the bad. He would agree with you, obviously, with the as he characterizes it, massive Q4 bookings, best-in-class free cash flow margins, he cites. They do have the new CEO, Sridhar Ramaswamy, who, by the way, we visited with, may have been his first time on CNBC several months ago in our AI special out in San Francisco. So Slootman moves to chairman there. He does take issue, does Gerstner, with their comms department, maybe not articulating the story in the best way. That's my interpretation of it, certainly not his, but he thinks it's too conservative, maybe very conservative, but time will tell.
It is conservative, Scott, but I think a new CEO should be conservative. So we were expecting 30% product revenue growth. We got 22 for the full year. That's, I think, very conservative considering what they have been putting up as of late. But I do think you have a new CEO who's trying to get at the lay of the land. They actually had 2 disappointing quarters last year, and they are trying to avoid that. Consistency matters. And so, okay, let's just slash the numbers and let's see what happens. And again, having these new deals, having these new products, I think makes a lot of sense and gives them momentum for the long term. And yeah, free cash flow margins are actually going to be for 2025, for fiscal 25 rather. I think they're actually going to be a little bit better than expected. The guidance actually is a little bit better than expected. And so they have to spend a lot this year. We have to wait and see on the demand side, but I really do think this is a great player in the long term.
Steph, thanks for making time for us today. Really important to hear from you on the other side of these earnings. That's Stephanie Link. You got a take on Snow?
My take is I really think this is an overdone sell-off, but I personally am not racing in here to do anything because I already own a bunch of these types of stocks, and I shouldn't really mix them all together, but I do feel to some extent you should only really have a few. So I'm not getting rid of CrowdStrike to buy into Snowflake, right? But at the guidance off by $15 million and the CEO stepping back to be chairman, and this is how many billions of dollars they wipe out of the market cap, it does seem like a lot. That being said, you live by the sword, you die by the sword. These are the types of stocks that do this. One day you feel like you're the king of the world. The next day they rip your heart out.
Yeah, especially ones that
it's the game.
Yeah, especially ones that have gone up to the degree that that some of these AI
no doubt, Cub Scout.
plays.
Listen, look at the performance of the stock going into this.
Yeah,
like it doesn't come for free. It comes with higher beta, added volatility. You know, kind of toughen up a little bit.
All right, let's.
Now, Snowflake CEO, former CEO Frank Slootman did sell a decent amount of shares before he exited, so he got to sell a bit higher. Granted, I also agree, dude. I don't think Snowflake deserved to get that big of a beating. I just think the guy they replaced him with, no one knew. Like if it was a different CEO, like a seasoned veteran, maybe the market would get excited, but no one knew, right? And as a result of that, it was a little tough for the street to kind of internalize it. Will you cover Zscaler earnings? So we talked about Zscaler. They had 35% year-over-year growth, great earnings. We're not going to be listening to their call at 7 minutes. We'll listen to Soundhound. The stock's down, I think, just because the stock's down. I mean, it's like a sort of Palo Alto Networks thing. It just didn't do as good as this market wanted to, but 45% year-over-year growth, $28 million away from profitability. You know, I don't think that's necessarily warranting of a massive decline. And it's down 4%. Nothing that crazy. Stock-based comp from Snowflake went from 861 to 1.1 billion. That's another thing the street probably was not the happiest with. And they're forwarding 22% growth guidance, with Palantir is at 20%. So for all the people that are like Palantir versus Snowflake, you know, Palantir can't grow. Snowflake's not growing that much either. Now, maybe they're sandbagging, but also maybe Palantir's sandbagging. So it begs the question then, which one do you give them? AMD after hours is, wow, 195. It's up 10.7% for the day. That's a lot for AMD. I'm going to Google AMD real quick. AMD, just to see that any news come out that's interesting. I'm trying to see if there's anything there. Nope. There's really nothing. Yeah. Even this Yahoo article, it's like, why is AMD up today? Their only point is NVIDIA had a good earnings. There's literally no news for why AMD should be up. I mean, there's no, if anything, there was an NVIDIA press release today with Rail Vision. There's nothing for AMD. I think, yeah, no, they didn't even get a price target upgrade. I don't know, dude. The market just seems to like AMD. Unless there's something else that you guys are seeing that I didn't see. Roman, thank you for the $2 super chat. He says, right now I am down 9% on Soundhound. Should I sell or hold? This is all depending on your conviction for the company. If you have to ask that question, you probably don't have much conviction about the company. If your stock's down 9%, that's not necessarily a reason to sell, in my opinion. That's a reason to buy more if you believe in the company, unless there's some dramatic thing that happened that altered your thesis. Soundhound grew 80%. The reason they're down is because they went up too much. That's not a reason to, you don't sell something growing 80%. But if you don't understand why you bought it in the first place, then you have to really evaluate, first of all, why did I buy before, why did I sell? Kelly says, why is NVIDIA down 30% right now? It's probably your brokerage that's glitching. There's no way NVIDIA is down 30%. That doesn't make any sense. Yeah, NVIDIA's up. NVIDIA's up a little bit after hours. AMD is up because of Dell. Yeah, but Dell earnings came after the bell. AMD was up the whole day. NVIDIA on my app is up right now. It has to be a brokerage, Kelly. I'll look at Robinhood. Let's look at my phone. NVIDIA's up. It's definitely, it's those, the brokerages from maple syrup world don't know how to show American equities. That's the problem with Canada. So, like, it is what it is. It is what it is. NVIDIA's up $5 after hours. Yeah. NVIDIA's up, baby. NVIDIA is up. I mean, it's down. Well, it's not showing it on my brokerage. Also, why would NVIDIA be down $30? Like, what could possibly happen to get NVIDIA to be? Oh, wait, Google's showing it's down. It's down 30. Okay, that's definitely a glitch, guys. There's no way NVIDIA is actually down. There's no way NVIDIA this has to be a glitch. There is no, because if NVIDIA was down 30, this is absolutely a glitch. If NVIDIA was down 30%, the whole market would have crashed by now. It's Google, dude. Fucking Gemini being nonsense. Like, now you've got Google. Like, this is the problem with Google. It's all misinformation. It's the issue. It's all fake. It's all, I don't know what to say. Let's try Bing. Let's try Bing and see. Okay, Bing.com. Here we go. NVIDIA stock. See, there you go. NVIDIA just like, it's just like, there we go. NVIDIA's more realistic, or Bing's more realistic. It does that on a lot of stocks. Yeah, it does. NVIDIA's white. That's why Google had a problem with them. Google's like, you know what? The name Jensen Huang sounds kind of white to us. So we're just going to tank their stock 30%. That's what happened. That's what Google said. Palantir after hours down about 0.2%, 2503. Bitcoin 61.3. And Soundhound down 13%. Marathon right now down a little bit after hours, down 16% for the day. CleanSpark as well. Snowflake still down 18. Salesforce is up 3% on the day, and Zscaler is down 7%. I don't know why the street's getting upset at Zscaler. Dell's up 14%. Autodesk up 7%. Fisker down 22%. Dell 15%. HP down 2%. And DNA still no results until 5 o'clock. Where's Robinhood for the day? Where's Robinhood? 1622 after hours right now. SMCI also up about 1.25%. All right. Not too bad. We got Soundhound in 2 minutes, and let's see what they're going to say. Did Amit announce his new stock buy yet? No, I did not. Tomorrow on the market open, I will be announcing the new company that I've invested some money in. It's a brand new company, and I'm going to announce it tomorrow, 9 a.m. on the market open. We will all discuss. I think I will have, everything should work out, I'm going to have a guest join me. He's going to call in for a couple minutes and talk about the company that I invested in. I know I'm being super vague about this, but you guys will understand why tomorrow morning, and it'll be really fun. It'll be really, really fun. Okay, Soundhound, let me pull up their thing. Soundhound IR. I should have that thing soon. Events and presentations. Press releases. Okay, here we go. Where's the events? Events. I thought I had it pulled up already. Okay, let me see. Soundhound events. So we'll listen to Soundhound today. That'll be the big one today, and then we'll keep going from there. Where is this thing here? Events. Oh, here it is. I got it. Okay. All right, here we go. Here's Soundhound. Should be starting in 30 seconds. And let's see what they're going to say. I feel like I've heard this sound before. I feel like I've definitely heard this song before. Any thoughts on starting a long position with Soundhound? I would not chase this thing, dude. I just wouldn't chase it. Not when it's up 300%. What time do we see new S&P 500? It should, so tomorrow after hours, we should get new S&P 500 news. But in the morning, they do the rebalance. So tomorrow after hours, we should know what companies. Even though they might do the official rebalance 3 Fridays from now, we should know tomorrow which companies are announced. And so we'll see. Oh, by the way, guys, we got new money market data. I know this call is about to start, but money market guys, they increased by 49 billion. Money markets have increased by 49 billion. Here we go, Soundhound. We'll talk more about that after.
Good day, and thank you for standing by. Welcome to the Soundhound Q4 2023 earnings conference call. At this time, all participants are in a listen-only mode. After the speaker's presentation, there will be a question-and-answer session. To ask a question during the session, you will need to press star 11 on your telephone. You will then hear an automated message advising your hand is raised. To withdraw your question, please press star 11 again. Please be advised that today's conference is being recorded. I would now like to hand the conference over to your speaker today, Scott Smith, Head of Investor Relations. Please go ahead.
Good afternoon, and thank you for joining our fourth quarter and full year 2023 conference call. With me today is our CEO, Keyvan Mohajer, and our CFO, Nitesh Sharan. We'll begin with some short remarks before moving to Q&A. We would also like to remind everyone that we'll be making forward-looking statements on this call. Actual results could differ materially from those suggested by our forward-looking statements. Please refer to our filings with the SEC for a detailed discussion of the risks and uncertainties that could affect our business, and for discussion statements that qualify as forward-looking statements. In addition, we may discuss certain non-GAAP measures. Please refer to today's press release for more detailed financial results and further details on the definition, limitations, and uses of those measures and reconciliations from GAAP to non-GAAP. Also note that the forward-looking statements on this call are based on the information available to us as of today's date. We undertake no obligation to update any forward-looking statements except as required by law. Finally, this call is being audio webcast in its entirety on our investor relations website. An audio replay will be available following today's call. With that, I would like to turn the call over to our CEO, Keyvan Mohajer. Please go ahead, Keyvan.
Thank you, Scott, and thank you to everyone for joining the call today. Once again, we broke a new quarterly record for revenue this quarter, which surpassed $17 million and was up 80% year over year. We are winning new customers and expanding with existing ones. We continue to create value for our customers, their customers, and their employees while delighting users with our technology. At the same time, we're also driving efficiency with an 80% year-over-year improvement in adjusted EBITDA. At Soundhound, we've made two important predictions for the future of AI. The first is that AI customer service will be as necessary for every business as Wi-Fi and electricity. The second is that speaking will become the primary way we interact with the devices around us. We believe voice and conversation is the most natural way to interact with technology, and fortunately for product creators, they can bring their products to life by simply adding a tiny, inexpensive microphone. These predictions are the foundation of our three-pillar business strategy. Let me start with our first pillar, where we power products such as cars, TVs, and IoT devices. We have a mature history in Pillar 1. We went from 0 to over 20 automotive brands in just a few years. These brands represent over 25% of the automotive industry, and we've added several brands just in the last few months. We power TVs from legacy giants such as Vizio to exciting new innovators such as Telly. We are in millions of devices and process billions of queries from cars, TVs, and other forms of IoT devices. Our customers choose us because they believe our technology is the best, and we help them protect the brand, users, data, and because we partner with them to differentiate and innovate. Then something incredible happened. The introduction of large language models and generative AI created a positive disruption in our field. While the big tech companies were disoriented and have been scrambling to make their own models, which could take years, we were able to swiftly integrate multiple generative AI models within a matter of weeks. Our integration was clever due to our years of experience and technology foundation, and that introduced our Soundhound Chat AI product with generative AI. Soundhound Chat AI can integrate with real-time domains and can go back and forth between multiple models seamlessly in a single conversation session, and is able to utilize even multiple models for a single query. For example, the driver of the car can ask for real-time weather, request sightseeing recommendations that match the weather conditions, ask follow-up questions, then request to start navigation to one of the recommended destinations by simply referring to it, such as, can you navigate me to the second option you recommend? Soundhound Chat AI has seen rapid adoption. Launched in early 2023, we were one of the first companies to show how generative AI could be integrated into a voice assistant. While others are still only making broad claims to generate headlines, we've been building applications for generative AI. Thanks to our proprietary technology, which helps mitigate hallucinations and other issues that are inherent with unharnessed generative AI models, our applications are already live in production and in the hands of consumers across the world. Let me highlight a few examples of our momentum and progress with Soundhound Chat AI. Immediately after it became generally available, auto brands saw the potential to increase in-car voice AI usage and improve the user experience using our product. That's because this is not just a simple API integration, but a seamless back and forth between large language models, content domains, and the onboard features of the car, such as the navigation system. Throughout last year, we piloted our technology across a range of high-profile OEM brands. We found that by adding generative AI capabilities to in-vehicle voice assistants, the frequency with which drivers and passengers engage with it increased multifold, and the user satisfaction increased significantly. The enhanced performance of Soundhound Chat AI for automotive has created numerous opportunities, and we are proud to announce that it has become the first in-car voice assistant with generative AI capabilities in the world to go live in vehicles beyond just an experimental pilot. Last year, Stellantis started a pilot with Etfs automobiles, and due to the incredible results, they announced going live in production in 18 countries. Recently, more brands such as Peugeot, Opel, and Vauxhall have announced their plans to utilize Soundhound Chat AI. Given our strong partnership with Stellantis, we expect many more brands to go live into production this year. Soundhound Chat AI is increasing the product quality and user delight, but we also expect it to lead to an increase in revenue with the higher royalty rate for customers that choose to adopt. Soundhound Chat AI is enabling automakers to add value to their drivers' experiences with new functionality. We believe we are at the very beginning of a refresh that will bring exciting new opportunities for car manufacturers, drivers, and Soundhound as we upsell these new features. In addition to Soundhound Chat AI, we also launched a new incredible product called Soundhound Vehicle Intelligence in the fourth quarter. Drawing on Soundhound Voice AI, it allows automakers to simply and easily voice-enable the car manual. This means that drivers can use voice and conversation to ask about settings, special features, troubleshoot, and more without having to spend time and effort leafing through a cumbersome printed document. Soundhound Vehicle Intelligence is another innovation that we expect will improve product quality and increase our revenue. We are working closely with well-known EV brands and have been gaining strong traction with luxury brands as well. For example, we won the business for a prominent US-based EV major to voice-enable their full fleet of market-leading vehicles. In addition, we significantly extended and increased the volume of our existing committed contract with a large auto OEM until 2037. Creating value in our Pillar 1 category is not just limited to automotive. We also license our technology to smart TVs and many IoT devices. For example, we've integrated our AI voice assistant with Tele, a new disruptive smart TV provider. Another customer, Vizio, an integrated platform for cutting-edge smart TVs, is a strong opportunity with our monetization model using voice commerce such as ordering food, groceries, and supplies on the TV, which is typically the largest screen in the most social setting of every home. For IoT devices, the use cases are endless, and we are working with more companies every day to extend or go into production in multiple areas, such as with large appliance manufacturers, telcos, airplanes, robotics, printers, wearables, coffee machines, and kiosks, among many others. We are also thrilled that in Q4, we have a notable revenue contribution from a preeminent AI chip company. Although this company has been a close partner for us for a number of years, this was the first time we generated licensing revenue from the partnership, and we expect more value will be realized from this partnership in the future. Moving on to Pillar 2, where we offer AI customer services for businesses such as restaurants, home services, personal care, and professional services. As we predicted a year ago, AI customer service is now outperforming humans. User adoption is on the rise, and consumers are increasingly choosing to interact with conversational AI due to its reliability and extended capabilities. We believe disruption in the customer service industry will be one of the first major commercial applications for generative AI and large language models. It is also becoming affordable and accessible to merchants of all sizes. Businesses are beginning to see AI as a necessity, just like Wi-Fi and electricity. We now have a proven scale in Pillar 2 as well. Today, our technology is live in about 10,000 merchant locations. We are fully engaged with over 100,000 locations in our pipeline, and we have over 30 million businesses in our near-term addressable market. We are at the very beginning of what generative AI will bring to the world, and we are emerging as a market leader by offering applications with real-world use cases. There are two very clear reasons that we believe we are leading here. First, our solutions are built on proprietary technology, and we alone own the entire technology stack. Second, our solutions are fully automated and therefore easily scalable and capable of serving brands of all sizes, from the largest brand in the world to your local favorite shop on the corner. We are offering easy-to-use, easy-to-implement solutions that make a real and immediate impact. I'll share some examples across our various offerings. Our Soundhound smart ordering product uses voice AI to support businesses by answering all inbound phone calls, taking customer food orders, and answering numerous questions, allowing restaurants to free up their staff to focus on making food and engaging with customers in the store. Jersey Mike's, a chain with over 2,000 locations, went live in Q4 with smart ordering and is rolling out at a rapid pace. Targeted for an initial 50 locations, we've already reached that goal today, and we expect them to expand the partnership based on the solid results today. White Castle, our first drive-through offering, continues to ramp up production. We are on pace to reach our goal of 100 lanes by the end of 2024. So far, we are also seeing our order processing of under 60 seconds, which is significantly faster compared to humans. In Q4, more large restaurant chains chose to integrate our voice AI ordering solutions to help automate in-store operations, including Church's Chicken and a large hamburger chain located in the South, which have approximately 2,700 locations we can integrate our solutions into. With these larger deals for our voice AI solutions, we're also seeing a number of customers look to bundle these solutions with our other offerings. For example, to deploy our new Soundhound product called Employee Assist, as restaurants look for multiple offerings to gain efficiencies in ordering and with employees. Soundhound Employee Assist is a game changer for businesses. It uses conversational voice AI to support restaurant employees like a co-pilot across a variety of tasks via their headset. For example, it can provide ingredients and allergen information to customers. It can also train employees with step-by-step instructions to ensure the product is prepared correctly without them ever having to remove their gloves, consult a manual, or distract another staff member, significantly reducing the stress on the worker. Another incredible Soundhound product, Dynamic Interaction, is our multimodal full duplex voice interface for kiosks, drive-thrus, or any device with it. We are working with a number of partners and customers, and our pipeline keeps growing. For example, Krispy Kreme has selected Dynamic Interaction. As you can see, our portfolio of restaurant solutions is taking shape, and major brands from convenience stores to multinational restaurant chains are taking notice. They come to us to improve their order process, experience, and accuracy of the order, while at the same time improving their bottom line. Today, We have restaurant solutions live in all 50 US states, and now we are expanding internationally. With 25 languages in our arsenal, we believe we have a massive opportunity to go beyond English-speaking countries. Next, Smart Answering is our phone answering solution that goes beyond restaurants and can be used by any company and any industry. With this product, we are empowering businesses of all types in how they respond to customers on the phone, allowing them to capture every business opportunity while also mitigating costs. Smart Answering can handle multiple calls at once 24/7, conveniently filters out spam calls, saving hours of wasted time for any business. It also provides SMS responses, captures leads with intelligent messaging that asks important follow-up questions, in addition to verbal answers around policies, hours, product, services, pricing, and more. We're already live with customers with Smart Answering, and the feedback is incredibly positive. Even the Smart Answering experience is fully automated. We can easily offer this product to smaller businesses that in the past wouldn't have access. And to massively increase our ability to scale and offer this solution with no-touch onboarding for any business, we've been piloting a self-service e-commerce approach in Q1 and seeing early adoption. Let me talk about Think3. Following up on the announcement of our acquisition of Think3, we've begun the integration of their exceptional team with Soundhound. Think3 brings more than 20 national and multinational chains spanning drive-through, fast casual, and casual dining segments, as well as convenience stores to Soundhound's fast-growing customer base. Examples include Chipotle, Casey's, Applebee's, Panda Express, Papa John's, and Five Guys. Because our voice AI is fully autonomous and does not use humans in the loop to perform, we are also able to rapidly scale our deployment without any degradation in quality. For instance, with Think3, we recently completed the rollout of voice AI ordering to 2,400 Casey's General Stores, which also is one of the largest pizza chains in the US. Jointly, we are combining nearly 2 decades of Soundhound AI innovation with decades of Think3 industry expertise and established relationships. Together, we will accelerate the deployment of leading-edge generative AI capabilities to the industry, while ensuring that our technology always works to preserve the best interests of our customers, their customers, and society more broadly. The combination makes Soundhound the preeminent global provider of voice AI for restaurants, significantly extending our market reach. Although we only closed the transaction in Q1 of this year, we are already seeing tremendous momentum with their customers and the ability to offer them additional solutions such as dynamic interaction, Smart Answering, and employee assist. The synergies are already taking hold, and we are moving at a rapid pace. As I mentioned earlier, we have 3 pillars: royalty from voice-enabled products, subscriptions from voice-enabled services, and the third pillar is monetization from connecting those services to those products. For example, drivers of a Soundhound-enabled car will be able to use their voice to order food by just talking to their car and can do so before arriving at the restaurant. Or they can make appointments to get a haircut, book a flight, or perform other types of transactions. We believe this will create the future of the voice commerce ecosystem, and Soundhound is in a unique position to realize this vision thanks to our strong footprint in both devices and services. With our expanded national restaurant reach, we see an acceleration of our Pillar 3 monetization strategy via transactions in millions of cars, TVs, and IoT devices. We believe this is a powerful business model which could add significant value to all participants. We would collect a fee for generating new leads for merchants and facilitating transactions. The store or restaurant benefits from a new customer being channeled in their direction, and the automakers and the device makers take a share of this economics. Most importantly, the end user will have the convenience of using their voice to get things done. We are excited to see our portfolio of customers using voice-enabled services continue to grow, which should allow us to begin to pilot this new commercial ecosystem. In closing, our revenue has grown on an average of over 50% over the last 4 years. This incredible growth during challenging times and against global market headwinds is a testament to our strong foundation, demand for our technology, and great partnerships we've built with some of the most well-known brands in the world. Going forward, we expect to maintain this strong growth and see massive opportunities to accelerate it even further beyond this year. The timely AI revolution is creating tailwinds in our favor. We believe that Soundhound has a unique advantage with its own IP, 2 decades of experience building trust with global customers, a trove of data, and a track record of innovation to move fast and invent our way forward. We remain at the forefront of conversational AI, and that's why we have been working on Polaris, our multimodal, multilingual, generative AI foundation model, which will be another important tool for us as we position ourselves as one of the leading and major forces in this new era of AI. With that, I'll now turn the call over to Nitesh to talk about our financial performance, key growth drivers, and outlook for the remainder of the year.
Thank you, Keyvan, and good afternoon, everyone. Q4 revenue increased by 80% year over year. We finished 2023 with accelerating momentum, and we are seeing exceptionally strong interest from enterprise businesses, most notably within the restaurant and auto sectors. In fact, demand for Soundhound solutions is so high that we now have a healthy waitlist of restaurant merchants, and we're calibrating our resources to ensure we deliver for the customers. While we continue to be mindful of our pathway to profitability, delivering against this demand is paramount. The exceptional growth we realized was coupled with cost containment. We focused on cost discipline this past year and will continue to do so. For the year, adjusted EBITDA improved by over 50%, and in Q4, our results were even better, with 80% improvement. Excluding certain costs that were necessary to fuel our growth and transformation brings us close to the positive Q4 adjusted EBITDA target we laid out last quarter. For example, the near-term impact of switching to Big Four audit firm PwC mid-year while becoming a large accelerated filer and upgrading some of our internal tools contributed to the majority of these costs. We expect these expense pressures to lessen as we go forward. The underlying drivers behind the remainder of the expenses are positive indicators of our future. First, we saw some tremendous growth opportunities in the second half of the year that we chose to invest in. We saw significant demand from enterprise restaurants in particular. Second, we saw a great opportunity to inorganically accelerate our go-to-market motion and capture a sizable and meaningful restaurant customer portfolio. The acquisition of Sync3 clearly positions us as the leader in the restaurant AI space. Lastly, we accelerated investments in our administrative functions, notably around internal processes and controls, to ensure we have an even stronger foundation for the sustained long-term growth we expect to deliver. We fundamentally re-architected this company in 2023. We are more efficient, more focused, even more nimble, and aggressively driving disruption and growth across voice-enabled products and services. Accordingly, we are updating a metric we have previously shared in what we call cumulative subscription and bookings backlog, which includes our previously reported cumulative bookings backlog to also now include new subscription revenue streams that we are focused on. Cumulative bookings backlog takes into account the prior quarter end balance plus new bookings in the current quarter minus associated revenue recognized. Cumulative bookings backlog is still derived from committed customer contracts, and this definition remains the same as the previous one. Subscription backlog takes into account customers where we are the leading or exclusive provider and assumes a 4-year ramp to fully scale with a total 5-year duration. We have incorporated reasonable assumptions about adoption percentages with lower percentages applying to pilot and proof of concept customers. We believe we can outperform these assumptions given the faster rollouts we are currently experiencing and expectation to work with these partners for much longer. Similar to the previous definition, we do not include expected auto renewals for our Pillar 1 customers. This allows us to combine our Pillar 1 and Pillar 2 businesses into a single unifying metric. As we have communicated before, our cumulative bookings backlog mainly represented our Pillar 1 businesses. In Pillar 2, we have previously noted that ARR standardizes the annual subscription-like potential of these contracts, while also indicating the better stability and predictability building in our financial model. That said, two different metrics on two different timescales doesn't synthesize our full potential in an easy to understand manner, so we believe this updated figure is more representative of our medium-term revenue potential. Ultimately, we are addressing a greater than $100 billion rapidly growing market. So this new metric gives you a view of the tangible customer activity we have won within that larger opportunity set. In Q3, I mentioned our cumulative bookings backlog was $341 million, with automotive being the largest constituent. I also mentioned that separately, in the restaurant vertical, that at full scale out, we would have 4,500 locations signed up and roughly $25 million in ARR. When we look at the combined potential of our signed up customers at the end of 2023, across both pillars 1 and 2, our cumulative subscriptions and bookings backlog was $661 million, up nearly 100% year over year on an apples-to-apples basis, thanks to growth in Pillar 1 and the incredible list of customers we have added in Pillar 2. Let me now get specific on our financial results for the fourth quarter and full year. In Q4, revenue was $17.1 million, up 80% and within our guidance for the quarter. Full year revenue of $45.9 million was also within the outlook set at the beginning of the year. Revenue growth in Q4 was predominantly driven by automotive royalties, with strong increase in units offset by slight decreases in average selling prices due to a higher volume of edge licenses that generally have a lower royalty than our cloud licenses. Note that particularly with some of our new generative AI solutions and ultimately with monetization, we think there are meaningful opportunities for unit price expansion. We also benefited in the quarter by a strong multi-year commitment of minimum guarantee volumes of our edge solution with an automotive partner and a new IP licensing opportunity with one of the preeminent AI chip makers that Keyvan referenced earlier. Over the full year 2023, we increased auto units by 68% and active cloud users by 55% versus the prior year. And over the last 4 years, we have delivered an overall compounded annual growth rate of greater than 50%. In Q4, our gross margins were 77.2%, up over 600 basis points year over year, largely resulting from the greater scale in our business. This helped drive gross margins above 75% for the full year, also up over 600 basis points year over year, as we increased our revenue sequentially every quarter and at the same time improved our cloud and data center efficiency throughout the year. R&D expenses were $12.7 million in Q4, a decrease of 41% year over year, resulting largely from our corporate restructuring actions earlier in the year. Despite the expense reduction, we continue to invest in disruptive innovation and expand our existing suite of products with solutions like Dynamic Interaction, Smart Answering, Employee Assist, Vehicle Intelligence, and Soundhound Chat AI. Sales and marketing expenses were $4.5 million in Q4, a decrease of 34% year over year, also due to the aforementioned restructuring. We continue to invest in go-to-market and customer engagement. As mentioned earlier, we are seeing tremendous momentum and heightened customer demand, largely resulting from the investments we have been making in sales and marketing. We will continue to invest in high ROI demand generation and brand awareness to ensure we further build upon the current traction. G&A expenses were $7.6 million in Q4, an increase of 3% year over year. The increase in G&A reflects two elements, some of which was not contemplated when we guided last quarter. First, part of our spending was related to diligence, negotiation, and closing of the acquisition of Sync3. Second, we accelerated investment in financial and non-financial processes and internal controls to support requirements under SOX 404(b) as we became a large accelerated filer. In total, these additional expenses, as compared to prior Q4, amounted to over $3 million and were the primary factors not fully encompassed in our previously provided adjusted EBITDA outlook. Across all operating expenses, non-cash employee stock compensation was $6.5 million in Q4. As a result, our operating loss for Q4 was $12.4 million, which reflects an improvement of 57% year over year. Likewise, for the full year, we saw improvements in our operating loss of 35% as we successfully grew the business while maintaining cost discipline. OI&E was $4 million of net expense for the quarter. and net loss was $18 million in Q4, an improvement of 42% year over year. This led to a net loss per share in Q4 of 7 cents compared to 15 cents in the previous year, an improvement of 53%. Adjusted EBITDA, which excludes non-cash charges of stock compensation, acquisition costs, restructuring and depreciation and amortization, was a loss of $3.7 million in Q4 2023, which was an 80% year-over-year improvement and a sizable dollar reduction, down from an $18.8 million loss in Q4 2022. Net cash used in operating activities for the entire year ended 2023 was about $68 million, improving roughly 27% year over year. Our cash position at year end was approximately $109 million, of which $95 million was in cash and equivalents. Given additional actions we have taken in early 2024, our current total cash balance is in excess of $200 million. Our capital position is unequivocally a source of strength and gives us the security and optionality we need to drive the business forward. With that, let me discuss our outlook for 2024. We are committed to continuing to fuel strong growth with cost discipline and returns focus. We expect to expand with our existing automotive partners and add Pillar 1 customers. We expect our Pillar 2 businesses to grow meaningfully and increase from less than 10% of our total revenue in 2023 to more than 20% in 2024. We see the overall top line growing to within a range of $63 to $77 million, with $70 million as the midpoint target. As we look further ahead to 2025, we believe we will cross $100 million in revenue and deliver adjusted EBITDA profitability. Our gross margins have been in the range of 70 to 80%, providing a strong indicator of our software business profile. Since we just completed the acquisition of Sync3, while we work on migrating their cloud and AI infrastructure to our own, we expect to have a temporary decrease in gross margins due to some of these duplicative expenses. In addition, while the majority of Sync3's revenue is AI-driven, they also have a legacy call center operation, which their team has been gradually upgrading with AI. We expect to further accelerate this migration, which will ultimately calibrate their gross margins to ours over time. As a result, we expect the combined company will show a one-time gross margin decrease in the early part of 2024, with steady improvement towards our historical levels as we get to the latter half of 2024 and beyond. Overall, though, we see this acquisition as roughly EBITDA neutral over 2024 and accretive beyond. Lastly, let me comment on expected revenue seasonality for the year. Our mix of business will shift through the year, as I described, to a greater mix of Pillar 2. But we will start the year more automotive heavy, just as we ended 2023. As such, we remain affected by the seasonality in the automotive sector, which tends to be higher in Q4 and lower in Q1. Again, in 2024, we see our quarterly revenue building through the year and back-end weighted. We believe we can grow our business roughly 50% year on year each quarter. Let me close by re-articulating our excitement about what lies ahead. Generative AI and large language models have created a generational technological shift. The old way is out. Customers are increasingly realizing they need partners like Soundhound to help pave the way forward. We are balancing the massive long-term opportunity with the inherent near-term volatility to navigate towards our goals. And we are bringing conversational voice AI to consumers everywhere so they can seamlessly access the information and services they covet through the products and devices they most interact with. Thank you. We will now move to Q&A.
As a reminder, to ask a question, please press star 11 on your telephone and wait for your name to be announced. To withdraw your question, please press star 11 again. Please stand by while we compile the Q&A roster.
All right, so that was the call. We're waiting for questions now. We'll see what people have to say.
Our first question comes from Dan Ives with Wedbush. Your line's now open.
Dan Ives.
Yeah, thanks. Good quarter. Can you talk about, do you expect more strategic partnerships from a distribution perspective to happen over the next 6-9 months? Like, is that Is that going to be a big focus from a go-to-market?
Hi, Dan. Yeah, that's definitely in the second, in our pillar 2, we see that as a big contributor. We have partnerships with, for example, Olo and Toast and Oracle and Square as channel partners, and they help us reach a larger number of merchants. And in pillar 1, we also, our customers are generally very large. For example, we just signed an extended deal until 2037 with one of the largest automakers. That's a lot of commitment for a very long time, so it shows a lot of trust.
Okay, and then can you just talk about how the conversation with customers is changing? I mean, it seems like the vision's been there, but now you're starting to actually see the traction. How does it feel like it's more strategic in terms of the conversations you're having, whether it's on restaurants, autos? Maybe you could just compare conversation today to even 6 months ago.
It's totally different, Dan. The demand is going through the roof, and we actually we are dealing with more demand than ever before. We have, for example, very large customers like multinational chains with tens of thousands of locations. We actually have to put them on hold to deal with someone who's a little bit bigger. So it's a temporary problem that we're dealing with, but it's in a really good position to be in. So customers are not coming to us, whereas maybe 12 months ago, even 9 months ago, we were actually going after them, knocking on their door. They are now knocking on our door.
Great. Thanks.
Thank you, Dan.
Thank you. One moment for our next question.
It'll be interesting to see Dan Ives' thoughts on this tomorrow, what he thinks about the company.
Our next question comes from Gil Luria with D.A. Davidson. Your line's now open.
Thank you. Good afternoon. I have one product question, one financial question. The product question, the chip company, what's the nature of that revenue? Are they incorporating your technology in a chip, and then when they sell it into devices, you're getting a license revenue, or is it a different type of arrangement? And how does that scale once it's in once the chip makers incorporated the technology?
Yeah, this actually was not a channel partnership. It was a direct revenue. So the company paid us for our IP, and we've known this company for a number of years. They're a close friend, close partner, and this was the first time we generated revenue from the relationship. So we are incredibly excited about it, and we expect more positive things to come out of it in the future. But that's as much as we can share today.
Got it. So then maybe another product question. You mentioned a large or a high-profile EV maker in the U.S. Does that mean that you can now send the technology in over-the-air updates? Because part of your gating factor so far has been incorporating into new cars only as they ship. But I think the EV makers based in the U.S., at least the 3 that I'm thinking about, allow for over-the-air updates. They already have a microphone built in. So does this type of deal make it possible for you to deploy your software a little more quickly and to a bigger set of automobiles as opposed to only the ones that get shipped?
Yeah, absolutely. Especially for our clouds, we could replace an existing solution, or sometimes they don't have a solution. So we could actually go to legacy cars and power them too. In this particular case, it would be for new cars and older cars that have already been sold.
Yeah, and then maybe one thing to add, Gil, I think, part of your question is about pace of scale. The other thing we're super excited about, as Keyvan mentioned, the prepared remarks, was around generative AI opportunities that we're already adding with existing customers. So it's sort of a build on top, and it really unlocks so many different use cases for us, and there's tremendous demand. So I think the opportunity of scaling faster and doing more per unit, revenue per unit, is a big opportunity for us.
Got it. So then on the new metric, on the new backlog metric, I want to make sure I understand the duration. So it sounds like on the subscription side, you define the duration as a 5-year duration. What's the duration on the booking side, on the other side, that on pillar 1? that used to be, I believe, 6 years. Is it still the 6 years, or are you now harmonizing it as also a 5-year duration?
No, great question. The current one is basically because they're committed contracts over the duration. So it's not like we're harmonizing. We're actually based on whatever's in a contract. So in Q4, we actually had some deals that extended it. So I'd say the average of that, I think when you take the weighted average of the full portfolio, it's still about that 6.5. But the actual device side, the product side, did extend because we got some deals that extended the duration of the device. So the Pillar One product. So the way, like you said, we on the subscription side made it 5 to standardize, but on the, just like we used to do with cumulative bookings backlog, we just tie to whatever the contract length is. Hope that makes sense.
It does. Thank you.
Thanks, Gil.
Thank you. One moment for our next question. Our next question comes from Scott Buck with H.C. Wainwright & Co. Your line's now open.
Hi, good afternoon, guys. Thanks for taking my questions. First, I was hoping I could get a little more color on your visibility into 25 and maybe why you're comfortable putting out a target today.
Yeah, I think it's a couple of different things. One is, we're building and we're making choices to sort of build a multi-year roadmap, and now we're not playing short-term, quarter to quarter, or even 2 quarters. So I think with the pipeline we're building, with the customers we're working with the investment we're making to try to scale, we're getting increasing confidence beyond just this year. And we thought it made sense. Frankly, through last year into this year, we're sort of giving mile markers only up until the 1 year mark. And so I think with the bookings backlog type metric that we were talking about, there's a lot of good visibility. And frankly, it's sort of like where we're sitting today in February, early in the year. And we know there's just a lot more pipeline and traction that we're gaining. So we felt confident enough to sort of give an early read of 2025, which we'll obviously calibrate as we go forward. But I think it's really a sentiment of confidence and commitment we're seeing from our customers.
That's helpful. Now, does that include any additional M&A or any potential deal you would do in the future would be on top of those figures?
Yeah, it doesn't require it. I mean, I will say we're super excited about the Sync3 acquisition and what it can bring. So from that vantage point, it is the 1 + 1 = a lot more than 2 opportunity we have with them. And then in terms of future opportunities, we'll continue to look. We think it's a very dynamic market with a lot of potential opportunities organically and then even possibly inorganically. So we certainly have nothing on the horizon to talk about there, but the numbers we laid out do not require it. If something structurally changed there, it also obviously, as you know very well, depends on the flavor and the size and the type of M&A that possibly could be out there. So if something we do changes that architecture, that ramp, we'll let you know.
Sure, that's great. And then on Sync3, I'm curious if you could give us something in terms of dollar terms, maybe what the upselling, cross-selling, revenue synergy opportunity is there, or even as, maybe a percentage of their legacy revenue.
Yeah, I think, let me try to think of the best way to unpack it. I mean, first of all, they bring this great portfolio of customers. We articulated, so the likes of Chipotle, Papa John's, Applebee's, Firehouse Subs, Five. There's just this, just as amazing are some customers that were early days of having some of those conversations. We certainly had a thesis when we acquired them as to what the possibilities could be. And I'll just tell you, early days are even more exciting of what we can do together. To your point, cross-selling our solutions, bringing together the different voice solutions, upselling some of the employee assist capabilities, smart answering. There's so many conversations going on. So I'm going to a little bit punt to later to give you better tangible visibility. But the roadmap we've laid out, we believe Sync3 will be a big contributor on that. The impact I mentioned of margins and particularly as they've been evolving the sort of call center business to AI, that is an evolution we'll work to together. There is definitely, as you know, anytime when the 2 companies come together, there's a lot of work to integrate, and we're in the middle of that. But long term, I mean, I just want to clarify again, we're talking, a restaurant space that for us is billions and billions of dollars of annual revenue opportunity, and we're just scratching at the surface of it. And together, I think we can go faster in capturing a greater and greater share. We also think when we look out at the competitive landscape, it's mostly greenfield. We don't think people out there have comparable tech, not certainly what we're seeing in terms of fully automated solutions. And most importantly, the restaurant demand is just, it's exactly what they need. They have labor shortage, they have cost pressures, and they need consistency of service. And this is a solution that fits very well. So in terms of the organic opportunity is a tremendous. With Sync 3, we're very excited about the synergies and the upside. And then the revenue outlook, and even maybe to your first question, us coming together gives us confidence to give you put a flag in the ground on what we think early signs of 2025 are. But I would just tell you, we wouldn't put that out there if we didn't think we could do that and even more.
Yeah, well, I appreciate the added color, guys. Congrats again on the quarter.
Thank you. Thank you.
Thank you. One moment for our next question. Our next question comes from Glenn Mattson with Ladenburg Thalmann. Your line's now open.
Hi, guys. Thanks for taking the question. So I just wanted to talk a little more about the comment that was made that perhaps some customers on the restaurant side have been put on hold for a little bit in terms of, because demand is kind of just overflowing your ability to kind of fill it right now. So I'm curious if that means that there's going to be more hiring involved, or maybe it's just more of a learning process as you've kind of scaled up from more smaller mom and pops to national chains and whatnot. And perhaps there's a learning curve for both sides of the equation, whereby the process of implementing the software will get faster over time, or that kind of thing. Maybe you could just give some color on your thoughts there.
I'll start. Sorry, and then Keep on getting on top. First of all, say, yeah, we're constantly learning. This is a new market. We're disrupting. We're growing. We're improving every day. I think we're learning a lot, frankly, also with the acquisition. One of the things Sync 3 has been really good at is scaling very quickly, and I think we can come together and drive improvement. Coupled, with sort of the building one of the beauties of our solutions in software, it can really scale very quickly once you kind of get the integration with point of sale systems, get menu ingestion, some of those things done right. And the quicker, every time we add a new customer, it really expands the market of other customers we can go to that we could really rapidly accelerate. So there's a lot of positive sort of build effect here that we can build and that we can continue forward with. On the investment side, yeah, we definitely want to go after the growth. When the demand is there, we don't want to say no to any customer. We want to be thoughtful of the roadmap. So we will absolutely look at our hiring and make sure that it's that we're calibrating it. And I wanted to jump in before Kayvon just to put my point of view. Like, it's always going to be cost discipline focused and so forth, and we'll be very judicious. But I think that we know the opportunity there. We're not gonna shortchange it by any stretch of the imagination. So we're certainly going to invest to make sure we're capitalizing on the demand.
Yeah, that's all that. And I would just add that the hold that I mentioned, we are talking about days and weeks, not really months or anything beyond that.
Great. Thanks for that color. And then last for me, just on the model side, I think, Nitesh, you said that, historically been 70-80% gross margin. And I guess theoretically, if you get to that kind of north of 100 million 2025 revenue target that you put out today, a lot of the growth will be on the restaurant side or the SaaS side, which theoretically would be, I think, higher margin than the auto. So would you have us model towards the higher end of that range for 2025?
I won't guide gross margin for 2025. I'll leave the guidance as I laid it out, but I will give you some color commentary to dimensionalize it. So, absolutely long term, we are, a software business, and so the margin profile should certainly be well north of 70, and we think the EBIT margin should be 30% plus, and that's at scale, fully penetrated. I'd say multiple years down the road. We want to make sure we're investing in the near term, and then I would also say to your specific question on gross margin, I don't think it's as clean as Pillar 2 versus Pillar 1, because it kind of depends. Even within Pillar 1, some of our edge solutions are very high margins. So it kind of depends on the mix across both. But I do think, we'll be marching back to the 70% range. And then part of it will also be this is going to be new where we bring on the call center business, which, we'll continue to, I think we look at Pillar 2 and the restaurants as sort of the first gate on major disruption across customer service. I think we said in the prepared remarks, generative AI in particular, one of the major disruptive areas is customer service with very natural conversations to enable consumers to just seamlessly access information and services that they want. So with that, and the reason I mentioned that is we believe that we can scale that really quickly, and we can leverage the call center capability to get the data and the actual production live customer interactions that will help improve our model. So there's going to be a bit of a journey to extend beyond restaurants into different verticals, and finding that right mix between maybe there is an advantage because the customer really demands a little call center support, as if you go from we can do the base 80% of the answering and maybe some part isn't. Those are things as we grow into Pillar 2 we'll calibrate on. So that's why I can't give you a precise answer right now. I will tell you though, yes, long term we absolutely should be growing back in the 70% range, but we need to keep going through the work and kind of get closer to that finish line to give you an exact on what 2025 will be.
Right. Thanks. Yeah, no, a lot of moving parts. I understand. Thanks, and congrats on the quarter.
Thank you.
Thank you. As a reminder, to ask a question, please press star 11 on your telephone. One moment for our next question. Our next question comes from Mike Lattimore with Northland Capital Markets. Your line's now open.
Great. Yeah, thanks. Congrats on an excellent year here.
Hey, Mike. Thanks.
Yep. So last quarter, you highlighted a lot of restaurant wins like White Castle, Jersey Mike's, Krispy Kreme. What percent of those opportunities do you think you might get deployed by year end, and sort of what are the keys to getting there, whether it's internal work or leveraging third parties?
Yeah, there depends on the customer. So, drive-through is a little different than phone ordering. We publicly last year made a joint announcement with White Castle about our opportunity to scale into 100 locations this year, and we're, on the pace. And that has some requirements of the drive-through setup on the hardware side, and so that's a bit of the gating pacing. They're a company that has full corporate ownership, so that's a little bit easier to fully deploy. Get into another type of customer that has franchisees, again, that one of the gating points. Jersey Mike's is an opportunity with phone ordering. They have, I think, over 2,000 locations at scale, and kind of went out of the gate with 50 locations that we're pushing through, and so this can move really rapidly. So I guess, not to dance your question too much, but it kind of depends on the shape and flavor of the customer. And we are getting faster every week that goes by. We're learning, and we're pacing it faster and faster. So we're hopeful that, and this is kind of why maybe one dimensionality of the answer would be the assumptions we use in the subscriptions estimate that we gave, sort of 5-year, which we believe that conservatively will ramp over 4 years, and we use the 5-year duration. So, I mean, if you want to use the 4-year that I conveyed as the measure, I think that's conservative. Again, we're going faster than that, but that's maybe to not set too high expectations too early. That's probably a safe place to think.
Yeah, no, that makes sense. And on Sync 3, I think they had something like 10,000 locations, I believe. Do you feel like you could apply your tech to all those locations, or is there a percent that's already kind of happy with what they have with it?
Yeah, I mean, the solution is already great, and but there's an upgrade opportunity by combining what they have with what we have, and then there's upsell opportunities by offering things like smart answering and employee assist to existing customers, and we are pursuing both of those.
And I also add, Mike, there's also an efficiency opportunity for us as we sort of migrate their back-end systems, the cloud systems, migrate to our technology. So it's also sort of back-end, not only just our front end, and that's a cost opportunity for us.
Yeah. And I guess just a basic financial question: what do you think Sync 3 contributes in 24, and what is current share count?
So in 24, we, it kind of depends on the synergies and so forth, but they have a good book of business that we're growing. The reason we're hedging a bit is some of it is the AI and call center that we're going to migrate the call center to AI. We're going to upgrade. So there's a few choices through the integration. Again, we're still pretty early in the integration process, but we're excited about the fleet of partners that they have, and really mostly about the synergies that we think we could build. But it's all contemplated in our guidance, and we think together we can accelerate even faster than we could have alone. Share count, I think it's probably 270-ish. I don't have the number right in front of me on the Class A side is probably where we are. We have, I think I mentioned the prepared remarks, some capital raising that we've done this year to get the balance sheet over $200 million of cash. So that is about where we are.
Mm-hmm. All right. Great. Thanks a lot.
Thanks, Mike.
Thank you. One moment for our next question.
We've got Ginkgo live after this. We could cut some of their
comes
as
from
well.
Brett Nobloch with Cantor Fitzgerald. Your line is now open.
Hi, guys. Thanks for taking my question. Maybe it was nice that you kind of gave us some info on, I guess, the year-over-year growth in auto units. I was wondering if you could maybe give us some type of indication for how many units or devices your technology is currently embedded in, and if that's something you could foresee giving us on a more frequent basis going forward.
Yeah, we are in the millions. We are considered disclosing the exact number. One challenge is that some of our customers don't give us unique device IDs, so then it makes it more difficult to accurately measure. So it might all look like one device, but it might be a million devices. There are ways to interpolate that, but definitely we are in the millions of cars and TVs and IoT devices.
The other measure we do give, and we put it in the press release, but it's the queries, which is another sort of an indicator of usage and activity, and that has been growing. It's been growing. We've been giving that number for a couple of years now, and crossing 3.5 billion sort of run rate is an indication of the breadth and also just the usage curve increases that we're excited about.
Got it. And then on maybe the restaurant business, I guess, any update to how many units you guys are currently deployed in, and what you're targeting for end of this year? I think White Castle, you're expecting to be in over 100 by the end of the year, but maybe more broadly speaking, given you kind of expect Pillar 2 to be north of 20% of the business this year.
Yeah, I'll break apart. We do with Sync 3 now have thousands and thousands, right? They brought a big arsenal of restaurants of the likes of customer names I gave a little earlier, and then we're always growing and have these massive deals that are currently we're working on that it's tens of thousands of potential opportunities. So I think the best way and I will say the pricing can range. If you're kind of in the phone ordering, you could be in the hundreds of dollars per location. If you're in drive-through more, it could be north of thousands. So kind of really in our more advanced state could be well beyond that. So of tech. So units and location are going to kind of be driven by the integration pace. We believe we are unpacking and addressing a market that has hundreds of thousands of locations. So what we have today is a small fraction, and I'd say in the U.S. alone, it's 1 million food establishments. So, and globally, multiples of that. So we are going to grow from the 10,000 range by the end of the year quite meaningfully, and then hopefully we'll be soon talking about hundreds of thousands that we're in, and the revenue numbers will follow.
Thank you. Much appreciated.
Thanks, Brett.
Thank you. Showing no further questions at this time, this concludes today's conference call. Thank you for participating. You may now disconnect.
All right, we still have Ginkgo, guys. If you guys want to watch Ginkgo, I'm going to start playing it. Let me know in the chat if we're okay, but I think we're at Q&A on Ginkgo, so we're right at the good part. So here's Ginkgo. We'll talk about both afterwards, but I think this is Q&A on Ginkgo, they're down about 10% after hours as well. Here we go.
Point generated real. And importantly, on the right, we've run millions of assays on genes from that library and tested their performance. And that chart on the top is actually, each row in that is a EC number. So this is like a class, different enzyme class. And we have hundreds of thousands of data points for each of these different EC classes. And that gives us an enormous set of label data, as we'll talk about later when it comes to AI, as well as the raw large DNA data asset. This aggregate data is important because it's needed to develop, down here at the bottom in gray, AI foundation models in biotech, right? And if you are an AI company watching this right now and salivating over these data assets at Ginkgo, give us a call, right? As you're going to hear in the next section, we really want to enable others to build on top of principally our automation, because we've invested a lot there, but also these data assets that are starting to accumulate at Ginkgo. We think they can be resources for tool developers in the industry. But I'll just point out, now kind of the upper part of this graph, most of the data in biology has yet to be created. Okay, so we do have great starter assets. Ginkgo's got bigger ones, I think, than most places. But what really we want to do is generate more data using the automation. So our customers and partners can do things like fine-tune an AI model offered by, for example, another service company, without that company needing to develop their own automated lab. And so you'll hear about that in a second with our partnership with Cradle. They'll talk about in the next section. But some companies will also want to generate their own huge data assets to build, for example, maybe a proprietary foundation model in a certain disease cell line that they're interested in, as an example. We can do that too. This is similar to the business model of Scale AI in the tech industry. So on that tech chart, I showed OpenAI on top of Scale AI, right? So OpenAI pays Scale AI to generate a lot of the data they use to train things like ChatGPT. Tesla pays Scale AI to basically analyze images and highlight that's a dog, that's a pedestrian, right? To help train their models for self-driving cars. It's a company in the business of generating labeled data to feed into other companies' machine learning and AI models. Absolutely happy to do that at Ginkgo, at large scale for customers. Okay, so one of the best investments we've made was bringing in Zymergen's proprietary software and automation technology to dramatically enhance both the scalability and flexibility of data generation at Ginkgo. And you can see within a year of the acquisition, we had installed the technology at our site in Boston. This is one of the things we're so excited about because they had this automation software team that had been supporting Zymergen's efforts, and so they could drop right in. And since then, we've actually evolved, we call these racks, reconfigurable automation carts. And so without nerding out too much, what's exciting about this is we can easily plug in new equipment into a big centralized automated system without needing to do a whole new automation rebuild. And if you live in the world of lab automation, when you have a great idea for some new thing to automate, you can start the clock and you'll have a big automated system ready 6 months to a year and a half later. Okay, with the rack system, if you have a new piece of equipment you want to add to an integrated automation workflow, we can pop that right into the system and then using software, add that equipment into the workflow relatively quickly. And importantly, we are now able to manufacture these racks much more inexpensively. We've increased our ability to manufacture them 5-fold while keeping our hardware team flat. And with this increased production capability, we plan to deploy 3 times as many racks in 24 as we did in 23 at Ginkgo. And we aren't the only ones that believe data generation is important. Just to give an example on the government side, just a few weeks ago, we hosted the House Select Committee on the strategic competition between the United States and the Chinese Communist Party. Congressman Mike Gallagher, who chairs the committee, noted that they came to Ginkgo, quote, to talk to experts and figure out the right strategy so that we, and not the Chinese Communist Party, can dominate AI and set ethical rules of the road. So, what did we talk to them about? Well, we talked to them about the facility you can see here, BioFab 1. This is actually a render, but I can look out the window over here and see it. And I took a tour of it last week. And that tall top floor is actually filled with things like huge cooling units and other hardware that's needed for running a building that is really meant to be filled largely with automated labs with these racks I just showed you. This looks and feels like a data center, right? If you went and saw, an Amazon data center and things like this, it is built to purpose buildings that are going to be filled with a certain set of hardware and have the infrastructure to enable that. That's very much what we're doing here, except instead of a bunch of servers, what we're going to have is a bunch of rack automation, hopefully generating the data that powers infrastructure services across the biotech industry. All right, on to section 2. Okay, so I'm super excited about this as we had the chance to announce our technology network with its 25 inaugural members just yesterday. We want to make infrastructure services the way that R&D work gets done in biotechnology. And Ginkgo cannot do that alone. Ideally, we want hundreds of new tools and service companies to flourish and to move that percent of R&D spending currently going to outsourced R&D services. And Mark showed some numbers of like the total R&D spending at biopharma companies compared to, for example, our revenues today. And my estimate is across the entire sort of research services industry, you know, we're maybe at less than 5%. It could be even as low as less than 1% of total research spending going to outsourced infrastructure. It's mainly going to on-prem work, right? People doing work by hand in labs, people you know, buying reagents and things like that. And really, I would love to see that shift into infrastructure services like it has in tech. We are big believers that brilliant technology is being invented outside of Ginkgo. There's not a big not invented here culture at Ginkgo. We partner deeply with many life science tools companies to integrate their tech in our workflow. To give a specific example, we were the first large DNA synthesis, like big contract for Twist when they were a very small startup back in the day. And we're still one of their largest customers today. We have also conducted over 15 M&A transactions over the last several years, including 3 we announced yesterday, to bring certain technologies in-house. And quick update about why we're excited about those 3: Patch Biosciences, Proof Diagnostics, and Reverie. So Patch is going to bring in large data sets, ready to deploy ML models and downstream assays for promoter and RNA stability and expression. And so we do a lot of work in RNA right now, so that's very exciting and a quick and good fit. Proof offers massive libraries of obligate mobile element guided activity, the omegas for short, with RNA programmable nucleases and nicases that will enhance our code base and overall offerings to pharma companies. This is more sort of molecular biology technology, sort of in the kind of editing space. And then importantly, also a great data asset. So it's more to add to that big data pile I was mentioning earlier. And lastly, Reverie is an AI company focused on leveraging computational chemistry and machine learning to accelerate drug discovery programs. And this acquisition will allow Ginkgo to significantly accelerate our own build out of AI program development. And I'm excited about the technology, but in all of these cases, I'm especially excited about the teams that are coming over in these acquisitions. It's a real speed up in terms of our human capital build in those areas and just awesome people. Okay, but the thing I want to highlight today is our technology network. And just as I highlighted several of our suppliers and acquisitions, we are now partnered with over 25 different companies that can benefit our network. All of those companies bring something different to the table, whether that's a focus on pharma, AI, enzymes, manufacturing, or biosecurity. And we believe that this network is just the start of driving a cultural change, like I mentioned earlier, in biotech R&D, from doing things in-house to doing them with outsourced infrastructure services. And I'll give you a couple examples so you get a sense of what might be possible. So Cradle, this is an exciting company developing AI models for DNA design in the area of enzyme engineering. So let's say a customer comes to Ginkgo to improve the activity and titer of an enzyme. And then after they find it, they want to express it in high titers in a cell, for example. So that would be a big end-to-end project at Ginkgo, take a little bit. And so I'll give you one part of that where we'd be integrating in Cradle. So we'd first go through our normal steps of designing and screening a metagenomic library to find an ideal candidate for our customer. So remember that big 2.7 billion gene database I showed you earlier? Great, we source an interesting seed sequence from that library. And now here's where we can leverage Cradle's generative AI platform to then computationally create a library of protein designs and their respective DNA sequences based on that seed sequence. And then the magic, those designs could then be synthesized, probably at Twist, given how Ginkgo works, and then cloned and tested using Ginkgo's automated labs in our Foundry and eventually in BioFab 1. And once we're happy with the results, the leading candidates would be transferred to our customer. And we might go through that loop a few different times for a customer project. And importantly, we've been able to pull together, in that case, a couple of different providers, someone who's really, providing computational horsepower and AI magic, Ginkgo providing a lot of lab infrastructure, Twist at the DNA synthesis side. Okay, and so we're also excited to help Cradle's customers be able to engineer proteins really from the comfort of their browser, as Cradle likes to say, and we can do the wet lab work for them at Ginkgo. I want to say I really love this vision. Okay, so I did a PhD. I spent 5 years holding a pipette. R&D scientists, put down your pipettes, right? Like in a model of outsourced infrastructure services, drug development scientists will spend their time designing experiments and workflows, understanding and reading about the biology so they know what they want to try to attack next as they're developing these biotech products, not spend their time manually moving liquids around a lab bench, right? It is just not the best use of the folks who have all this experience in both experimental design and biology. And in a world of outsourced services, I love Cradle's vision of doing that all from the comfort of your browser, all that lab work. Okay, so another partner I'd like to highlight with sort of an illustrative case study is BitBio. So BitBio's created what they call IO cells, which are human iPSC cells, differentiated to represent various wild type and disease models, which are needed to effectively study drug designs and better predict in vivo behaviors. BitBio cell lines are a terrific asset that we can incorporate into our programs. They're customized for a particular disease state a customer may be looking at, and we can test a multitude of different drug modalities across these cell lines and also screen our large libraries of optimized promoters and gene editors, like you heard, for example, in the Patch acquisition. So you can integrate some of those technologies in with theirs. The magic here is that Ginkgo gets BitBio cell lines running at high throughput, which is great for our customers, and BitBio gets a distribution channel in Ginkgo so that they can have more companies licensing their strains and paying them, right? And I think this is key, right? So we need to make it easier both for biopharma companies to access the latest new cell lines like those at BitBio, but it also needs to be easier for companies like BitBio to exist and sell cell lines, right? And as I mentioned, Ginkgo has a 90-person commercial team and growing. So we're hopeful this is a real asset to tool companies in the space to get their technology in the hands of these large biopharma R&D customers. And hopefully by Ginkgo going out and being able to show a multitude of technologies coming together in these programs, it also helps increase that 1 to 5% or whatever it is of research spending going out to infrastructure services, make that number go up for the whole industry. So I'll end with this. Biopharma customers repeatedly tell us what they care about is increasing probability of success, reducing the time to results, and reducing R&D costs. Large AI models and big data sets in the hands of the scientists at our customers, we think.
Guys, let me know if you want to keep this going. If not, I could talk for the next 15 minutes about broader markets and we can end it out, or should we just keep watching this? Let me know. I'll keep playing it until let's see what you guys say in the chat.
Can really increase the odds of success in drug development. And it's worth like an extra point here. There's a lot of noise about automation and AI, like, replacing scientists and robot scientists or whatever. That is not our belief at Ginkgo. We are not trying to take scientists out of the loop with the infrastructure.
All right, I think we're stopping it. If anyone wants to watch it, I'm putting the link in the chat. You guys can definitely watch it. But yeah, we're done with Mr. Jason Kelly. Look, my thoughts on Ginkgo. The company is incredibly interesting. Again, it's basically like the iOS app store. They're looking for their TikTok, their Instagram built on top of that app store. And they're like going to be like Apple. They're going to take a 30% fee off every transaction from a synthetic biology perspective, which is really cool. They've made synthetic weed. They had a partnership, synthetic cannabinoid. They made a lot of, they've done a lot of cool things. The problem is the insiders are selling so much stock. The company's not profitable. They're not growing like they were during the pandemic. And it's just kind of, it's one of those things where Kathy's bought a lot of it and she's bought a lot of it for the long term. And now she has to be long term because this thing's not going anywhere for a very long time. So it's one of those things where I wouldn't touch it. I know it looks attractive at $1.50. There's a reason it's at $1.50 or $1.12 right now. Kathy Wood of this stock has in her flagship fund 121 million shares, and she's got a load more in some of the other funds. So big Kathy stock. I'm assuming she'll buy probably a couple million shares today, but it's not something that I would be super, super excited about. All right, so we had Soundhound and we had Ginkgo. Soundhound, look, a lot of comments were, should we put some money into this thing? I will not chase this stock, but I think their earnings were phenomenal. 80% year-over-year growth is nothing to scoff at. 77% gross margins is amazing. NVIDIA investment is awesome. Obviously, these guys believe in them. It's down 16% after hours because it's up 250% year to date. I don't know what the fair valuation is on this company. All I do know, from my perspective, is $2 billion market cap, $45 million in revenue, 47% year-over-year growth, trading at 44 times revenue for a company that's not profitable. I can't do it personally. I would not feel comfortable at night knowing I have shares of this company. Now, if you feel comfortable gambling, assuming it'll go to the moon just for the hell of it, then be my guest. But outside of that, I don't think nothing on this earnings call necessarily gave me any excitement. The earnings call itself wasn't bad. It wasn't incredibly boring. There were good answers to questions. They were nice. They kind of like explained themselves. And the quarter was really good. It's just, I think the stock's run up a lot, and it's run up a lot, because of retail momentum. Now, if I was the guys at Soundhound, I would have rented a very fancy studio. I would have gotten some nice cameras, and I would have made this a presentation, because this company's been around for 20 years. It's worth $2 billion. Not many CEOs. I know we live in the world of the stock market where companies are valued at 10, 15, 20, 30 billion, 3 trillion. But most people in their lifetime will never make a company that's worth a couple billion bucks. This guy has, the CEO of Soundhound. So I would really take advantage of that moment and try to convince people to buy my effing stock. And I think like an audio presentation that sounds like it's on crappy audio, that's not really the best way to do it. But nonetheless, earnings call was good. I just personally would not put money on this. Mario says you're wrong, Amit. Sound to the moon. Maybe. And if you make money on it, I'll be very happy. It's just one of those things that I'm not chasing this one. This one can be a little scary given how much it's run. Okay, so let's see what else we got going in the broader equity markets. We've got Robinhood 1631 flat for after hours, up 1.12% on the day. NVIDIA up a little bit after hours. Google was showing it down 30%. That was a glitch by Google, but that is up. AMD is up another 1.29% after hours. I don't know why AMD is up, but it is up. So yeah, congrats to AMD shareholders. I mean, I guess it is what it is. AMD doing phenomenal. No real news on AMD. Soundhound is down 16% after hours. Ginkgo Bioworks down 13% after hours. And NYCB down 20%. They disclosed material statements in their filings around problems with their loan provisions. On top of that, the CEO stepped down and they replaced him with someone else. And one of the directors left because he didn't like that the CEO stepped down. A little bit of internal bureaucratic drama happening with NYCB. Regional banks are down after hours as a result of that. Look, if we have to consolidate, i.e. kill off some of these banks and they get bought up, I don't think that's the worst thing in the world, but that is something that's struggling right now with NYCB. CleanSpark down about 7% on the day. Bitcoin 61,380. Folks, this is the second day that we are above 60,000. Yesterday we touched 59,000 very briefly, then we rebounded within about 10-15 minutes, and now 60. I don't know if it's the floor. I mean, we could get a massive little 10% pullback. I think that could happen. But the more we stay above 60, maybe the more we get to be above 60,000 on Bitcoin. But it's been doing pretty well now at 61,000 right here. So there you go. So Bitcoin's doing well. Again, the miners like Marathon not doing the best after hours. That is down about 16%. My CNBC girlfriend is on CNBC. Her name, we all know her name. You guys know who I'm talking about. The OG subscribers know who I'm talking about. She made an appearance today. I wished her good luck to join the show today because she's awesome on the show. And she's back on CNBC. So we're going to listen to her. She'll be home in a little bit, so it'll be nice to listen to her. Maybe she'll walk through while we're actually listening to her right now. But ladies and gentlemen, JP Morgan's Gabriela Santos. You guys know how much I'm a fan of her. She's back, and she's talking about the equity market broadening out. Here we go.
Santos, Chief Market Strategist for JP Morgan Asset Management.
I don't know why she stares into people's souls like that. she just stares into your soul, but still, she's good at talking about this. Here we go.
As you see, live with us once again at Post 9. Nice to see you. Welcome back.
Thank you.
What a month it's been, and it's been broad-based. NASDAQ's up 5%, the S&P up almost 5%, Russell better than 5%. Dow's the laggard. But are we set up now for what may be a sweet spot?
I think we are seeing signs of that broadening out. One thing we do is we track the contribution to year-to-date returns of the 10 largest companies. End of January, 90%. It was a carryover of last year's story. Where we sit today is with only 74% of returns being driven by just a handful of stocks. So we're getting closer to what would be normal, which would be about 60%. So we are starting to see other companies participate within tech, other sectors, healthcare, industrials was a very strong
6.5%. Yeah, industrials are up 6.5%. Record high today. This is February. Discretionary 7.5, 52-week high. Industrials record high. Tech record high.
I think it's been, for me, two big themes this month. The first, we know there was a readjustment of expectations for rates just to more closely align with the Fed. But I think it's important to realize that high for longer is not the same thing as higher for longer.
Good point.
It was the uncertainty of how much higher we have to go that was paralyzing. I think companies can adapt just knowing what the cost of capital is, hence why stocks did well, even as rates reset higher. But the second big thing was earnings. And I think the better than expected end of the earnings season was really, really positive. And you started seeing sectors like industrial start to deliver better earnings.
Should we believe in a stat like this? Since 1930, the S&P has seen 16 cases in which the 4-month period from November through February were all positive, and the full year has been positive in all 16 cases. I mean, that speaks to momentum. It speaks to why perhaps we got here in the first place, and whether the trends that have been in place are going to remain in place enough that stocks can actually have a good remainder of the year.
Yeah, and I think it speaks to how low sentiment had gotten late October, right? It was that higher for longer. Is the 10-year going to 6, 7? What's going to happen with pockets of the economy? What's going to break next? Into now fully more appreciating that we can handle high rates and that you can have a soft landing or positive growth. So we do think there's a bit of a sweet spot here where growth is resilient, so good enough, at the same time that inflation's normalizing, but it's still there. So nominal growth is supportive of revenues, and especially as margins are stabilizing. What I worry about, though, Scott, for the rest of the year is eventually that narrative goes too far, right? We're still talking about being later in the cycle, which means really a focus on quality is still important. And it's too early to go after the kind of companies that are low quality or the kind of sectors that need rates to come down, which is actually what's up today. It's a bit early for that.
Can we be so late cycle if the Russell is just starting to get going? Like, if the Russell's going to start working, how can we be so late?
And
That's actually a really good question. Russell's breaking out a little bit today.
It's a bit bizarre of a cycle. There are a bunch of different cycles within the cycle. But I think if you just look at one metric like the unemployment rate below 4% for 26 consecutive months, that's a sign that we have little spare capacity, and that's a sign the economy's later in the cycle. But late cycle can last a long time. It just means that consumers are more focused on value. Companies need to be smarter about efficiency and cutting costs, and that companies that are bigger and have more cash on the balance sheets stand to do better. But that's not just the Max 7. There's other stuff there.
So this is pickleball?
Okay, so what's really interesting about what she said right there is that the IWM is a flight to small caps. I mean, some people have this bad boy going to 230, 250 by the end of the year, which would be pretty incredible. I mean, if that happens, there's going to be a lot of small caps that do well. The problem is IWM, it doesn't have that much good quality inside of it. There's a lot of these unprofitable companies that really depend on rates coming down in order to finance their businesses effectively. So if IWM breaks out, it would have to be some type of rotation from large caps. And it's weird because I would imagine the rotation from large caps rather goes to individual names like a Robinhood, like a SoFi, versus just these unprofitable companies that are living in the worst rate environment that we've had in 40 years. So it would be interesting to see if that rotation does happen. But she, like many other people, believe that the market does need to broaden in regard to the rally. Now, this is what we saw right before the Soundhound call. Money market funds increased by $49 billion today. I don't really know how to make sense of this. It decreased by $9 billion over the past 2 weeks, increased by $49 billion this week. Market's still doing pretty well. At some point, maybe there's just a bit of diversion of certain funds from certain institutions into these money markets versus the money that has been allocated away from these over the past couple months, because we have seen decreases, but we've also seen some increases. This also can be just companies that have money on their balance sheets that they need to put into money market funds, right? And their argument is like, all right, let's just redistributed here for now instead of investing into startups or R&D. So money market funds have increased regardless, 6 trillion on the sidelines, and Bitcoin is at 62,000, right? So, I mean, at some point, I would argue that when this thing starts running to 70, 80K, which I think this cycle, we're going to see something like that happen. Today, ETFs bought 11,000 coins. Miners only mine 900. After the halving, that'll turn into 450. So the demand for ETFs and inflows are there. I don't know how much that money is going to want to stay on the sidelines when they see something like this racking up. By the way, they don't even have to buy Bitcoin. They could just buy the damn ETF. So if Bitcoin goes to 80 or 100,000, the ETFs are probably going to go up for a good 30 to 40%, and boom, there you go. You could just buy the ETFs if you don't want to buy the assets. So I think and then if you buy the ETFs have to buy Bitcoin. So there's this way in which I think money market funds will want to allocate certain types of capital to things that are maybe a little speculative, but at least they have some exposure to it. And if they really see it running, my thesis is that FOMO comes for everyone. It doesn't matter who you are, FOMO will come for you. And if you have your money on the sidelines, if this thing's ripping to 100K, 80K, I mean, like, you're going to take some of the money and say, all right, let me get some exposure. So we'll see. We'll see what happens there. But we do have 6 trillion on the sidelines added, 49 billion today. Crowd control says 70,000 Bitcoin. CleanSpark will drop to $10. Again, look, I've been saying this throughout the entire day, and I have to remind this to myself many times. CleanSpark, Robinhood, Marathon, these stocks are up aggressively over the past couple of weeks. And if you didn't get them at the bottoms, that's okay. But you can't really complain when they fall 10, 20% after going up 200%. It is what it is. Same thing with SMCI. I mean, SMCI pumped to 1,000. Right now it's at 873. You can't really be upset about it. And we've all kind of accepted SMCI's price. I mean, no one's even complaining about it. I mean, it's like, yep, SMCI is an $800 stock. It is what it is. And so, I don't know. I think it'll take some time for the CleanSparks and Marathons to keep having more gains. Bitcoin has to keep performing in order for that to happen, and I think that will happen. But those dips to me are massive opportunities if you do think Bitcoin's going to perform. But you got to be ready to DCA onto those, right? If you're buying at some of these higher prices. The company I am announcing an investment in that I said I invested in, I will not be announcing today. I'm going to announce it tomorrow on the market open. I thought I would do it today, but then I thought it over. I was like, you know what? It'd be better if we just do it on the market open. So we'll be doing it on the market open, and it'll be super fun. I will say that you guys will not expect the investment that I'm making. I'm pretty sure all of you will be very surprised when I say the name of the company, but it's going to be really fun. I can't wait to see how you guys react to it. So it'll be fun tomorrow, 9 a.m. I'll have a guest who's involved in this whole thing call into the show, and he'll talk about it. I can't tell you. This is one of those things where I can't tell you. It has to be on the market open in a certain way. So it'll be fun, dude, though. It'll be super, super fun. It'll be super, super fun. It's not Enphase. It's not Tesla. It's not Snowflake. It's definitely not Snowflake. It is a technology company. That is correct. It is a technology company. I have made the investment. The investment is now completed. And I own a piece of this company. And tomorrow on a Friday morning, you guys will find out. Oh, tomorrow's March 1st. Wow, tomorrow's March 1st. It'll be fun. It'll be fun. All right, let's listen to Ashwant Damodaran. I'm a fake Indian because I don't know how to say his name, but let's see what he has to say about valuations right now. He said the market's overvalued a month ago. Let's see what he's saying right now.
Of NYU Stern School of Business joins us live. Welcome back. It's good to see you again.
Thanks for having me back, Scott.
No, here we are. I mean, February, the market's up nicely yet again. So I'll ask you to answer the question I posed in the intro. What do you think now?
I mean, if it was overvalued a month ago, it can't be undervalued now. That would be a reversal of philosophy that would upend everything I think about value. But that said, though, I mean, even a month ago, I said only one of the stocks looked significantly overvalued, which is NVIDIA. And it's actually the stock that's gone up the most. So that can be taken as an indication that I either have no idea what I'm talking about or the market's doing things that I just don't understand.
I mean, far be it from me to debate somebody who knows valuation and better than anybody, but maybe the valuation wasn't as overstretched as you thought about a month ago. Maybe we're not looking at things. Maybe we're looking at things in a way that we used to, but now you can't because we're having a hard time assessing what AI is really going to mean to some of these companies. And I bring that up noting that when you were last on, NVIDIA was at 682. Now it's pushing 800. I asked Stacy Rascon of Bernstein. He's one of the best analysts around. What's up with NVIDIA and the valuation? I want you to listen to what he told me, and I'd love your reaction on the other side.
NVIDIA is still not expensive. It's actually still the cheapest of all of the AI stocks. It's way cheaper than AMD. It's cheaper than Marvell. It's even cheaper than Intel at this point, right? So I still think there is room for expectations to continue to go up. I think so.
I mean, this was right before they reported earnings, and it was another blockbuster. So how should we view this now?
Damning with faint praise, right? That's like saying, yeah, I'm short relative to a typical NBA player. I mean, that's when you make pricing statements against a subgroup of stocks, in this case AI stocks, and say it's the cheapest of the AI stocks, that might very well be true, but they might all be overvalued. I think at the moment, the fact that I think we have to accept is AI is real. It's going to make a real difference to business, and I think NVIDIA is in the front seat of that market. That said, though, that pathway is not as easy and as open to profits as the market seems to be assuming it is. I mean, right now, NVIDIA is in a strange place, if you ask me. It's a great trade, but not a very good investment. I mean, trading is about mood and momentum. And if you think about mood and momentum, I don't think I've ever seen a company celebrated as much as NVIDIA. Jensen Huang is the greatest CEO ever walked the face of the earth, and this company cannot be stopped. At least that's a perception. And at least in the near term, how do you stop that perception from driving prices up? But the problem with mood and momentum is everything at some point in time, the fever breaks. And the question is when that'll happen for NVIDIA to still be a great company. But I think the pricing is a little bit out of control on the company.
Now
it's weird because the PE is only 35 on NVIDIA. So and Apple is at 30 and NVIDIA is growing 120%. Apple's not growing. So I don't know. I know this guy's like the dean of valuation, but I feel like that from that valuation, it's not that crazy.
This surprises me in the sense that I feel like I could almost make the argument the exact reverse of what you said, that it's actually a great investment. Why bother trying to trade around? I've had people come on my other program and say, well, I took 20% off my NVIDIA holding because this is unbelievable. Well, now the stock has elevated a lot. So how are you going to get back in now? But it's proven to be an unbelievable investment for those. And by the way, I think you're one of them who got in really early and has been riding that wave ever since. You're not a trader, you're an investor.
And I'm glad I got in when I did. But the question to ask now, if you're an investor, is if I get in now, what am I pricing in? I mean, if you back out from the pricing, the $2 trillion market cap, what NVIDIA has to do break even, it's got to add about $400 billion in revenues. It's got to add 400 billion revenues to what it has as revenues right now. That's a daunting task. It's plausible, but if investing is about the game of the probable and you play the plausible game, you're setting yourself up to lose. Near term, they will beat their revenue and earnings targets because there are, all engines are firing at full force right now. So I wouldn't be surprised if on the next earnings report, they took their earnings expectations and beat them again, which is what pricing is all about. That's why I said it's a good trade. Is in the near term, they're more likely to deliver upside surprises. But in the long term, when you price the company to be the best company ever, where is the upside?
Okay, so, the interesting thing is like, how can they do that much revenue? I think this Twitter thread kind of gives us a little bit of a basis to understand why. MKBHD, popular tech YouTuber, just got access to OpenAI's video generation model, Sora. These are some prompts he put in. All of this is running on NVIDIA GPUs. So when he says, how do they bring in $400 billion of revenue? I'm not saying it's literally just through Sora, but like it's stuff like this that's growing at an exponential rate that NVIDIA is the only game in town. So prompt one, a medium-sized, friendly-looking dog walks through an industrial parking lot. The environment is foggy and cloudy, shot on a 35-millimeter film, vivid colors. And there you go. Looks pretty amazing. Second one, a time-lapse close-up of 3D printer printing a small red cube in an office with dim lighting. There you go. I mean, that looks pretty damn incredible, dude. That's that's insane. Like, that looks realistic. And it's only going to get better. It's only going to get better. A young professional product reviewer in a well-lit studio is surrounded by gadgets and technology, sitting in front of a computer with two displays. He's holding a cinema's camera as he ponders what video to make next. He's in focus while the background is slightly blurred for cinematic effect. I mean, that's wild, dude. That's a real guy. It looks like a real guy. It looks like he's thinking of making a YouTube video. Look at that. It's crazy. He says, what I learned, it can struggle with physics, specifically with legs walking. Often in story-generated videos of walking, the legs cross over and merge into each other. Also, branded items never quite match up to real life. Things like cameras, etc., are quite identifiable. He says, my God, the lighting is so good sometimes. In the third clip, it's almost as if there's a large soft key light just out there for the frame to the left, and across the board, lighting and shadows match very well. Across the desk, the computer, keyboard face are, etc., but he has 6 fingers. And so he says it's pretty incredible stuff. All of this is going to run on NVIDIA and these damn GPUs. And those GPUs are going to generate NVIDIA a lot of money. And so maybe that's where NVIDIA generates all that revenue that the professor is looking for over the next few years. Bitcoin, 61,400. PayPal down a little bit. Rivian down a little bit. Rivian bottomed at 10.07 so far, right now at 11.32. So if you got that Rivian dip at 10.07, you are up. SMCI up about 1% after hours. Where's Robinhood? Robinhood 16.29 after hours. And then we got CleanSpark at 16.58 right now, down about another 1% after hours as well. And then Palantir, where's Palantir? Did we close over 25? We did. 25.03 after hours. 25.03. So Robinhood 16.29 and then Palantir 25.03 after hours. All right. Young Indian man with fake brick walls creating content at a desk. Dude, someone commented on the YouTube video yesterday or like 2 days ago. And I'm sure they were new to the channel, but they said, your brick wallpaper is out of line. And I said, they are real bricks. And then they said, no way they are real bricks. How does it have to have a hard cutoff line when they are all misaligned? This is impossible. I think these people are new to the channel because they were really upset that these bricks were not aligned. Now, the thing is, if you're a true member of the channel, you know these are real bricks. They're just not installed the way that people historically have installed bricks, because I did it myself because I'm a man and I go to Home Depot and shit. And so you see my hands, all the battle scars on my hands. You see this stuff? Like I really worked to do it. So I didn't do it the best, but it's definitely not like it's fake or anything like that. By the way, I was supposed to redo the background of this set like 3 weeks ago, and I haven't got into it. I don't know what we're going to make the background. I have this TV right there that I want to put in the back and just have Bloomberg playing the whole time. So I don't know. Every weekend I'm like busy doing other stuff and I don't actually get this done. So we got to get this done eventually. I got to put like fun stuff in the background and actually make it cool, because right now it's not. Also, I have to, the daily Palantir video will probably be out by like 8:30. That video will be talking all about Palantir and Snowflake. So that'll be out today. So make sure you check that out. And yeah, that's pretty much it. Kaiser says, Amit, I work in art installation in NYC. I can come help. That's awesome, dude. Art installation. That's so cool. I think these bricks are definitely a work of art, quite frankly. I mean, if you look at the bricks near the door. Look how perfect those bricks are in comparison to the door. Just absolutely like stellar. You know what I mean? It's like these are not bad. These are not bad. We got it. We did it well. We did it very well. Someone says you inspired me to read that Peter Thiel book behind you about halfway through. 0 to 1 is great. 0 to 1 is great. I love that book. I read 0 to 1 in 2019 and I didn't understand it. Peter Thiel's like, oh, competition is for losers. And I thought he meant like, oh, you're a loser if you worry about competition. That's not really what the argument is. The argument is building a monopoly, going from 0 to 1, building a product that is so differentiated it doesn't have competition. It's not really about like any emotional reaction around being a loser or winner. It's a much more deeper concept. And when I read it the second time, I was like, oh, I actually get it. So it's definitely one of those books that is worth reading. Ticker in the background would be sick. Yeah, I'm thinking about a bunch of stuff in the background, dude. We got to really make it a good set, like a really dope set. Because right now it's just brick walls, and it's got to be more fun. So we'll see soon what we got to do. And then, yeah, tomorrow, what time we find out of the rebounds? I think we find out during the day, but then after hours, they announce the companies. After hours, they announce the companies, but in 3 weeks, the third Friday of March, they do the rebounds. I would put the odds at like 80-20 right now. I mean, not 80-20. I would say probably 60-40 we don't get in. There's a chance we get in, but companies are profitable for a while before the S&P committee, whoever these people are, decide to let them in. So, I mean, like, is there a chance? Yeah. Is there a good chance? Yes, because we fulfill the requirements, which is what matters. Will it actually happen? I don't know. It might take a while before the committee's like, all right, we'll we'll put these guys in, especially because our institutional ownership for Palantir is not as high as most of the other companies in the index. I want to see S&P 500 committee members. I just Googled that. I want to see who's on this thing. Like, who's actually controlling this thing? I wonder if we could find it. I feel like that's hidden information. Oh, wow. Look at this article. The secret committee behind the S&P 500. Bloomberg did this in October 2020. They published this. Oh, it's a podcast. Okay. So I guess, I guess people don't really know. I guess people don't really know who's on the committee. Which company earnings are on Friday? Let's take a look at that right now. Earnings. Let's see. I know Broadcom is tomorrow, right? So we have Fubo in the morning. Broadcom, Plug Power, Intest, Amneal, Rapid Microsystems, Tidewater, Radnet, Atlantica Sustainable Infrastructure, Intest. I don't know any of these companies. I know Fubo, Plug Power, and I think Broadcom. So we'll go through them in the morning. And in the morning, I have officially invested in a new company. 9 a.m. Make sure you guys are here. I will be making the announcement tomorrow morning on March 1st, the new company that I invested in. It'll be cool. You guys will enjoy the company. I will say, I don't know if everyone will agree with the company. I'm not the one hint I'll give is I'm not selling this company. Dude, I'm not selling this company for probably like 10, 20 years. Like this is one of those things where I'm not selling for a very, very long time. Just not selling. So it'll be fun. Tomorrow we'll talk about it. And it'll give me some new things to talk about on the channel because this company is I've invested a decent amount. I'm not going to say the entire amount I invested, but I invested a decent amount because the due diligence I've done over the past month has made me so interested in it that I dropped some decent money in there. And so we'll see. It's not SpaceX, dude. Like, I don't have access to SpaceX. I wish I had access to SpaceX. That would be pretty cool. But I did not have access to SpaceX. It's not Plug Power. But I'm not selling for a very long time. It's not Tesla. It's not fucking Google, dude. I just sold Google. It's not Google. It's not Robinhood. I have enough Robinhood, dude. I've got enough hood. Okay. I've got enough hood. Michael says you'll sell for call options in no time. No, but I may sell for call derivatives. That might happen, but not call options. I had to actually sell my CleanSpark options to fund this purchase. I sold it a while ago. So I had to raise some cash to be able to make this investment. And the investment is now made. And I'm not touching it. Does a company need to get kicked out for them to add Palantir? Yes, it's only 500 companies. So some company has to get kicked out, which that might be another reason if they don't have a company to kick out, which I'm pretty sure they have a couple of them to kick out. Every rebalance, there's usually a couple that need to be kicked out. That would pave way for Palantir. So it'll be cool. It's not MicroStrategy. It's not BlackRock. You guys are never gonna guess it, dude. It's gonna be cool. It's gonna be cool tomorrow. It'll be cool. It's not HIMS. It's not HIMS, Eric. It's not HIMS. Goodness. We're not investing in dick pills here. We're not doing that. All right. I think we're done for today, folks. This was super fun. Earnings season, I think, is officially coming to an end. I think we're done with every company. Next week, I'm pretty sure we're done. Going into March. Now we have 2 months until earnings begin again in May. And this earnings season, definitely, I learned a lot about how to run these streams better and more effectively. So going into May, we will make sure that it's a month-long endeavor. I mean, it's like a month and a half. We started this it's a month. No, Google and Microsoft were like early February. So it's about a month of just every day, like literally every day there's earnings to discuss. So we'll be better in May and we'll keep doing it. All right. I think that is it. It's not OnlyFans. I've never subscribed to an OnlyFans girl ever. Never done it. Never needed to do it. It's never been that interesting to me to actually like take out my credit card and subscribe to that. I'm like, I don't say there's nothing wrong if you have. I just personally have never felt compelled to actually do it, dude. Like to actually subscribe to one of these girls. It's not a problem if you have. I've just never done it. I've never done it. Duolingo. No, it's not Duolingo. It's not Bumble. It'll be cool though. You guys will enjoy it. All right. That's it for me. We'll see you guys on Finance Junkies Daily Palantir. We'll be out probably around 8:30 comparing everything from Palantir to Snowflake. And then we'll be back tomorrow on the market open, 8:45 a.m. That's it. Thank you, everybody. Appreciate it. I'll see you guys tomorrow. I'll make the announcement. It'll be a Friday. Bunch of companies covered in the morning, and we will keep going from there. Thank you, everybody. Have a good one. Good night.